Good morning, everyone. Welcome, guys. So I don't know how many of you have attended the orientation program or that orientation session of 1 hour, one and a half hours that we had conducted. If you have not, then I mean, there's nothing to worry. You have not missed anything pertaining to financial accounting and reporting. We had a general discussion about the CPA curriculum, this entire program. So today I'm going to spend the first maybe half an hour in talking about financial accounting and reporting, and then let's also get to know each other a little bit. Just a quick introduction. We'll go around the, I can't say go around the room, but go around the screen, and let's quickly introduce each other and get to know each other a little better, and then we immediately start off. Okay, so hi Ajay, hi Kapil, Rishikesh, Alam, Asim, Sejal, Nikhil, Chaitali. Can you all hear me, guys? Yes. Okay, so Chaitali, it could be an issue with at your end. Good morning, Ashish, Rachita. All right. So hi Priyanka. Let me quickly talk about this financial accounting and reporting curriculum. There are total 10 chapters in this, right? This is the lengthiest paper in the syllabus, in the entire CPA curriculum, right? The other ones have 6 and 8 chapters, right? Audit has 6 chapters, regulation has 8, and BEC has again 6. Total there are 30 chapters, right? 10, 8, 18, 18 and 6, 24, 24 and 6, 30, right? So 10, 8, 6 and 6. 10, this is the only paper which has 10 chapters, and then within the chapters there are modules, right? If you're attending, like, this is your first paper that you're attending, then in every chapter there are modules, right? So some chapters could have 8 modules, some chapter could have 10 modules, some could have 6 modules. That number of modules could be different chapter wise. So in all, there are about 60-65 plus modules in the entire syllabus. Okay, so we are going to go module by module, and when you revise, so let me this is something that I think I mentioned in the orientation session, that there was a survey by a very big consulting firm. In that survey, it was found that whatever we learn, whether it is academics or anything else, we forget 20% within the first 24 hours. Okay, and this was a survey done on like hundreds and hundreds of people, so we can rely on the statistic. Whatever we learn, whether it is academics or otherwise, we forget 20% of it within the first 24 hours. We forget another 20% within the first week, and we forget another 20% within the first month of what we have learned, right? If we don't go back and revise it, right? But the survey also said that if we go back and revise it within the first 24 hours, then it's going to stay with us for a long time to come, right? So what is important is to revise whatever we will cover in the 4 hours, right? Every Saturday and Sunday, whatever we cover in the 4 hours, it is important for you to go back and revisit that within the first 24 hours, right? So for the Saturday's class, maybe do it on Saturday. For the Sunday's class, do it on Sunday itself. Don't wait for the entire week. Okay, and then during the week you can practice questions, right? So I'll tell you how to go about it. So like I said, first attend the class, right? Attend the class, and in the class, I'll be taking you module by module. I'll be taking you pretty much line by line in the book, and the reason for that is they can pick up any line, they can pick up any word and make a question out of it. So if you skip anything, you are taking a risk. And in the exam, of course, that a 75 and a 74, there's no difference. it's just 1 mark, but the outcome is, one is pass and the other is fail, right? So you cannot afford to miss even one single question in the exam, right? So therefore, I'll take you pretty much line by line. You also need to go through it line by line when you revise it. But of course, if you have attended the class attentively, then whatever I cover in 4 hours, maybe it will take you just 1 hour to quickly go through it. Okay. Now, the way you would ideally go about this is I'm sharing the screen. I hope everyone can see this white screen here. Yeah. So this is of course my personal recommendation, and this has worked for many students. So I hope it will work for you. Uh, and this you have to do, diligently. Okay. So first is attending the class, right? Then it's your revision, right? Which actually it's not a revision, it's your self, kind of self study, right? So after the class, you will do your self study. I'm not calling it revision. Okay, self study. Now in the class, let's say if I do chapter 1, module 1, module 2, module 3, and so on, then chapter 2, module 1, module 3, and so on till chapter 10. So we'll be covering the entire syllabus like this. Right? What you need to do is, if I have covered 3 modules today, just a random example, if I have covered 3 modules today, make sure you cover the 3 modules today itself. Okay, so you covered the 3 modules. Okay, tomorrow I'll cover another 4 or 5 modules. You covered them tomorrow itself. Now, during the week, quickly revise, just pick module 1 and revise module 1 thoroughly. Okay. Now, when I say thoroughly, what I mean is, let's say if it's just a 5-page module, go through those 5 pages absolutely, absolutely thoroughly, line by line, word by word. Try to understand each and every word in that module, right? If you don't understand even a single word, note it down, and keep. So what I had also mentioned in the orientation session is, while studying, if you have doubts, keep noting those doubts at one place and then ask me, in one go. Let's say if accumulate all your doubts of chapter 1 at one place and then ask me in one go. Okay. So keep noting those doubts. Okay. Make sure that you understand each and every word. If you don't, then keep noting those doubts. And then once you have done those 5 pages, don't look at the watch while doing this revision. This is your first revision, and this is, I would say, the most critical revision in the entire journey, right? Because this is the first time you're getting a complete understanding of that topic. Okay, a thorough and complete understanding of that topic. So don't look at the watch. Those 5 pages, for someone it could be 5 hours, for someone it could be 2 days, right? But don't proceed until and unless you are totally comfortable with that module. Okay, now, close the book and try to recap. What were the topics? What were the points? Okay, once you have reached that level, that after closing the book also you are able to recap what were the topics and what were the points inside those topics, then you can do your multiple choice questions. Okay, round 1. Even after all this, the first time that students normally, when they attempt the questions, they get in the range of 50 to 55%. Right? It could be, if I just expand this range, it could even be 40 to 60%. But yeah, anything below 40, if is concerning. Anything above 60 is great. Okay. Uh, so this is your first time. This way you will complete the entire syllabus along with me. Okay. I'll cover in every class, I'll cover certain chapters, certain modules. You will do self-study the same day. Saturday's class, Saturday, Sunday's class, Sunday, the same day you will do self-study. Then during the week, you will do revision 1 and you will do MCQs of those modules, right? So this is your first revision and first round of MCQs. This way you will complete the entire syllabus with me. Then you may want to go to another subject and do the same thing for that subject and then come back to FAR, right? Or you may just straight away want to do FAR second round, right? That's totally up to you. I would suggest, go to another subject, okay? Because otherwise, it'll get very monotonous. Okay, so to break the monotony and the boredom, go to another subject, follow this entire pattern over there for that subject. Okay, complete one round for that subject, then come back. Okay, then there'll also be a gap of 15-20 days, whatever time you take to revise that subject, there'll be a gap here, right? And which is also important, like I said, to break that monotony, and also to to understand that after 20 days, what is your whether you are able to recap those topics or not, or have you already started forgetting those topics and those points. So it's a nice way to sort of assess where you stand. Okay, now when you come back, do your second revision. Again, do module by module, but this time it will take you much lesser time. Okay, first time a particular module took you 5 hours to complete. Now it will probably take just 2 hours to complete. Okay, do your MCQs second time, and once you do the second MCQs for the second time, and on an average, students get in the second round 75 to 85, right? First time you had got, let's say, 50 to 55, in this range. Second time you will get 75 to 85. Okay, if you're getting 75 to 85, then also do your simulations. This is your round 1 of simulations. Okay, whichever modules have simulations. All modules don't have simulations, so do your simulations. Now, because you're doing the simulations for the first time, you will get 50 to 55 in the simulations, or if I expand the range, maybe 40 to 60. Okay, which is absolutely normal. Don't panic. Everyone goes through this, this cycle. Okay, now complete your second round of revision like this for the entire syllabus. Go to the alternate subject, come back. Come back, do your third revision. Okay, third revision will take you, let's say, the same module which took you 5 hours in the first round, 2 hours in the second round, will probably take you half an hour in the third round, right? Do the MCQs, but this time don't do all MCQs, just do the flagged ones, right? So in the software, there is a feature where you can flag a question, right? So there is a there's a basically a check box where if you check, that means you have flagged that question, right? Now, when you flag a question and you exit those MCQs, and next time when you again click on the MCQ thing, it will ask you whether you want to solve all the questions or you want to solve only the flagged ones or the unanswered ones, right? So choose the flagged/unanswered ones, then it will show you only those ones, right? So in the third round, you need not do all the MCQs, you can only do the flagged ones. And this time you should be crossing 85 to 95 in MCQs. And when you do sims, this is your second round of sim. In sims, you should be crossing 75 to 85, right? And in case you are crossing 90, so 85 to 95, in case you are crossing 90 in both, then you don't need a fourth revision, right? Then I think you're good to go. If you're not crossing 90 in both the things, then do a fourth revision and then do again MCQs and SIMs, MCQ fourth time, SIMs third time. Basically you have to keep doing this until you reach 90. You have to get 90 at home before you sit for the exam. This is my personal suggestion, to each his own. I mean, your decision is yours, but my suggestion is don't sit for the exam until you cross 90 at home. Now, for some students, maybe they will cross 90 in this round itself. Well, good for them. If you have crossed 90 at home, whether it is your second round of revision or whether it is your 10th round of revision, I really don't care which round of revision it is. What I care about is you should cross 90 at home. Okay. So once you cross 90 at home, you can schedule your date and sit for the exam. But you have to follow this diligently, right? And the second revision, third revision are going to be really tough in the sense that you won't feel like doing the same module again, because your mind will say, I already know this, why am I reading this again? But trust me, as you read the same module again, you will realize certain things which you had not realized in the first reading, and that is normal. So that means you're evolving in this entire process. You are evolving, right? Your understanding of finance is evolving, right? So this happens with the brilliant, the most brilliant of students as well, that when they read the same thing the second time or the third time, they feel that, oh, I didn't realize that this, the real meaning of this line is this. I didn't understand the significance that time, right? So that means you're evolving, so which is a good sign, right? And so keep doing this until you reach 90. Okay, now let me quickly take a pause and see if you have any questions here. When I be supposed to do this revision before the class? No, Arjun, you have to do this after the class. Okay. Sir, does the Becker software have two sets of MCQ rounds? No, it is the same set, but you will have to do it twice, thrice, whatever. Okay. Of course, the Becker software has, except for, so there is a homework section, as in you have certain set of MCQs in that section. Let me quickly, or maybe, during the break, or, later I'll show you, take you through the software again. I have taken you through the software in the orientation session. But basically, you have module wise MCQs, and those are like one set of MCQs. Apart from that, there are unlimited tests, right? So you can choose a test. You can choose a module and select 30 questions. It will randomly pick 30 questions of that module and, give it to you as a test, right? So you can choose module 1, module 2, module 3, a combined test of 100 questions. So you can do any permutation combination and create your own test, right? So that is unlimited, right? So there are unlimited tests. That means basically you can do it any number of times, right? But module wise MCQs, that's only one set of questions. Okay. So you can do the MCQs of module wise MCQs. You can also do the unlimited tests. And then of course there are some couple of mini exams, right? After 2 or 3 chapters, there is a mini exam pertaining to those 3 chapters. And then at the end, there are 2 mock exams, which are like full syllabus exams. Okay. All the 10 chapters, MCQs and SIMs put together. Okay. Next question. You can attempt MCQ from Becker multi-time, only you need to restart. Yes, exactly. Will time in each revision would remain the same, or will the reduce? So it will reduce, right? So naturally it will reduce. If you took 5 hours to read the first, read one module, the first time, you will take much lesser time, the second time. Do we have negative marking? No, there is no negative marking in this exam. Therefore, it is important to attempt all the questions, right? Don't leave any question in the exam. Will you be taking MCQ at the end of each class? Not at the end of each class, but at the end of each chapter, right? So if chapter 1 has about 8 modules, once I cover all the 8 modules, then we will do MCQs, because I also need you to go through those modules, before we attempt any question in the class. Okay. Doing another subject in between won't break a flow. Well, again, depends from student to student. For some students, they want to juggle between 2 subjects, that they feel more comfortable with that. For some students, they want to complete one subject, totally. So it's up to you. There is no hard and fast rule on this. But what I meant was that, if you have done one full revision of FAR, right, then you may want to go to another subject and do a complete revision of that subject and then come back to FAR for the second revision, right? I'm not saying that, uh, uh, without completing FAR, you go to another subject, right? Complete FAR once, then if you want, go to another subject, complete that subject, revision once, then come back to FAR. Okay. Um, at the end of the class, please show the unlimited test option. Sure. How do the percentile system works in CPA exam? Could you please explain? Okay. I mean, can one subject and appear for exam as well? Well, yes, you can prepare for one subject and appear for that subject, and then once you clear that subject, then start the second subject. That's absolutely possible. But if you have attended the orientation session, you would know that I mentioned that there are some linkages between the subjects, right? So as long as you are comfortable with those topics where there are linkages with other subjects, you can take one paper at a time. Okay, so Nana, so for example, in FAR, you have deferred tax, for which you need some amount of knowledge on regulation. Similarly, in regulation, you have schedule M1, M2, M3, M4, for which you need some amount of gap knowledge, right? Similarly, in auditing, you need complete FAR knowledge because you're auditing the financial statements which are prepared under a general purpose financial reporting framework, right? So you need those linkages have to be, you have to be comfortable with those. As long as you are, then you can take one subject at a time. How much time we should take to attempt single MCQ? Well, in the book, if you go through the the initial 10-15 pages, there's a very detailed description of the exam, and how the testlets are going to appear in the exam, how much time you should devote to each testlet, and so on and so forth, right, Jyotsna? So you will find that information in every book, right? Not just in FAR book, in each and every book. The first 5-10 pages, or maybe more than that, about 15 pages, are dedicated to this particular aspect. Okay, so there you can find this. If you don't, then let me know. I'll tell you. So only one question remaining: the percentile system. How does it work? Okay, let me take that. So how the percentile system works is basically the top 25 marks are going to be graded as pass. Okay, so for example, if the highest marks in the exam is highest marks somebody has got is 99. Okay, if somebody has got 99, that means that is the topmost percentile. Now the next person could have got 96. The next person, the next highest marks, I mean, could be 94. I'm just taking some random numbers over here, right? And so on. So whichever is the top 20. So this is first, this is second, this is third. Like this, if we look at the top 25 marks, okay, let's say the top 25 marks end in 87, as in the top 25 percentile of students. Okay, so let's say 99 marks, 5 people have got, 96, 15 people have got, and so on. Okay, 94, 20 people have got, and so on, right? So now if 1,000 people had appeared for the exam, right, what is the top 250 scores, right? Now here we have already covered top 40 scores. Now top 40 scores, 99, 96, and 94, okay, are the top 40 scores in this particular example, right? So what are the top 250 scores out of 1,000 people? Now it could end at 87. That means if you have got 86, you will be declared as fail. If you have got 87, you are in the top 25 percentile, you will be declared as pass, right? So in a particular exam, the top 250, the top 25 percentile could end at 87 also. In some exam, the top 25 percentile could end at 72 also. That means if you have got 73, you will be declared as pass. But when you get your result, it will not show 73, it will show 75, because that's the 75th percentile. Here, even if you have got 87, it will not show you 87. In the result, it will show you 75. That means you are in the 75th percentile. Okay. Is that clear? Not clear? Okay, so Arjun, just for you one more time. 93, 100 people have got. 92, well, 100 is a very big number. So let's say 10 people have got. 92, 10 people have got. 91, 5 people have got, and so on. Now, like this, at 87, we complete 250. So if you take the cumulative frequency 5, 5 and 15, 20, 20 and 20, 40, 50, the moment this reaches 250, that's the last. So in my example, I'm saying at 87, it reaches 250, the cumulative frequency. Okay, that means the top 250 marks end at 87. So if you have scored 87 or above, you will be declared as pass. Okay, now let me take another another thing, that the person who has got 99 will be the 99th percentile. The person who has got 96 will be the 98th percentile, right? So this is the 99th percentile, this is the 98th percentile. So when this guy gets his result, it will show 98. The 94 is the 97th percentile. Okay, so when this guy gets his result, it will show 97. So he will think I've got 97, but actually nobody knows their real marks. It's the 97th percentile. So when the 87 guy gets his marks, gets his result, it will show 75th percentile. It will show 75th percentile. It will show 75 basically and pass. Now somebody who has got 86, it will show him 74 and fail. Now is it clear? Is that clear now? Yeah. Okay, guys. So any further questions on this? Otherwise, let's quickly go through the round of introduction. So Ajay, well, see, we don't know exactly how they do it, right? So that's AICPA does not disclose, or the state boards of accountancy, they do not disclose how they actually come out with the result. So there is some algorithm they play. There's some algorithm, some kind of modeling that's happening, behind the scenes. So nobody really knows how the result, is calculated. Same thing for your eligibility. We have seen students with this from the same university, same college, with the same division, getting different credits. So how they actually do it, we don't know. But uh, but the guess is that yes, it is on a periodic basis. It is on a window by window basis. So when I say window by window, um, now of course there's continuous testing happening in India, but actually the CPA exams are conducted in a window format. That means you could take the exam in Jan and Feb. March there were no exams. Again April and May, and then June there were no exams. July and August, September, there were no exams. October and November, December, there were no exams. So, so these were called windows. This is the first window when you can take the exam. This is the second window, the third window, and the fourth window. Now, normally what, the guess is that what they do is they look at the entire window's performance, and then they come out with the percentile. And that is why, there's a cutoff date for the result. So cutoff date is like, if you have taken the exam before, let's say 20th of Feb, then your result will come by a certain date. If you have taken it after 20th of Feb, so that means basically from the 21st to the 28th of Feb, then your result will come at a separate time, right? Now that means, uh, again, like I said, we are not sure about this, but the guess is that that means they are considering up to 20th of Feb, all the students, if 1,000 students had appeared during this period, then they are coming up with the first 250 marks, the top 250 marks, and, declaring their result based on that. And then now, because they have a decent amount of data, they are for the 21st to 28th Feb, they are not looking at just the 21st to 28th Feb data, but they are looking at the entire data of Jan and Feb to declare these guys' results. Okay, you get what I'm trying to say? So up to 20th Feb, it is whoever has appeared till 20th Feb. Then between 21st and 28th, it's the entire population of Jan and Feb, right? So that could be one way they do it. Another way could be, because, and that's why, by the way, earlier it used to be very important to decide, when should I take the exam? Should I take the exam in the first window or the last window? Because, again, although in the CPA exams, everything is computerized except the written communication part, where somebody manually checks it, right? Because it's your written English and all that, right? But the rest of it is checked by the computer. Right, so there is very little scope for sort of moderation, right? If you have heard this term, right? So moderation, so there is very little scope for moderation. The only scope for moderation is in the written communication section of the BEC paper. Everything else is checked by a computer. So if your answer is right, it is right. If it's wrong, it is wrong. Nobody can, there is no scope for an error, and also there is no scope for any manipulation, right? The only place where there is subjectivity involved, if I'm checking your paper and I give you in written communication certain marks, another person checking your paper could give you slightly more or slightly less. That's the only area where your marks can sort of be, if I may use the word, manipulated, right? Because there is subjectivity involved. The rest of it is totally computerized, right? So there is no scope for manipulation. Now, coming back to this point, that window one, if these 1,000 students have not been great performers, then maybe the 250 will stop at at 65. That means if you have got anything more than 65, you will be declared as pass. So it depends on, and that's what percentile, this whole concept of percentile is all about, right? It's a relative marking. Okay, guys. Okay, so the point is, Ajay, there is, you don't need to worry about this. You have to give your best. That's all. Because when you take the exam, you don't know who else is taking the exam, because people from all over the world are taking this exam, right? People from China, people from Germany, people from US, people from Canada, people from all over the world are taking this exam. Japanese, the French, the Russians, everybody is taking this exam, right? Although it's an American qualification, but it's globally it's a sought after, globally sought after course. So people from all over the world are taking the exam. So you will never be able to know, who are you competing against, right? So all you need to do is give your best, right? Don't aim for a 75. You aim for a, that I will solve all the questions in the exam correctly. That should be your aim. That, give me any question from the syllabus, I will be able to solve it. That should be your target. And then go and give your best, because you will never know who you are competing against. Okay. And now, of course, with artificial intelligence and all that, they are probably doing it through artificial intelligence, and therefore, they are not even looking at only the students of that window. They are probably comparing you against students of the last 5 years, maybe, you know. So you will never know who they are comparing you against. Is it people from only that window? Is it people from that year? Or is it people from last 2 years? Who are they? You know, what is the benchmark that they are using? You will never get to know that. They never disclose this. So nobody in the world, I mean, except for people working in AICPA, you know, or who are in the examination committee, or the, you know, only apart from those people, nobody else would know. Okay. All right, guys. So let's go through, let's have a quick round of introduction. And of course, you have to write in the chat box, right? Let me quickly check with the admin, you know, uh, if it is possible to unmute you for just the introduction round, because as a matter of policy, you know, students are not allowed to be unmuted. Students have to remain muted all the, you know, throughout this entire, you know, this curriculum. You can ask questions to the in the chat box, right? But uh, I think let's not break the policy. Let's do it through the chat box. So can we, you know, I'll take the name and you quickly introduce yourself. Just say, you know, what's your qualification, where are you working, and which city are you based out of, right? Just these couple of things, uh, and anything else that you want to add, you know, that will be nice. So let's go one by one. So I have, you know, I'll go as per the order in my screen. So I have Ipvinder, the first person. Ipvinder. Ipvinder, are you there? Okay, let's go to the next person, Karvi. Karvi. Okay, Karvi, so you're from Jamnagar, qualified as a chartered accountant in September 21, and certification course on forensic audit. Wow. Okay, great. And are you working, Karvi? Not yet? Okay. Next, I have Abha Singh. Abha. Okay. Next, I have Samsung. So your name is not appearing. It just says Samsung. Samsung SM. Okay. Mayank Agarwal from Haldwani. Okay. Qualified CA in November 18, working in MNC in Bangalore. Okay. Great. Great. Thank you, Mayank. Meenu Mahate. Meenu Mahate. Meenu, are you there? Okay. Atul Gupta. From Delhi, recently completed chartered accountancy. Great. Great. And are you working, Atul? You mean KPMG? KPMG? Okay. KPMG India or KGS? Atul, are you with India? Okay, great. Sejal Doshi, CA July 21, BCom working at EY India, transfer pricing, Pune. Okay, great. Good to have you. Vivek Bad. Okay, so Meenu has replied, Meenu Mahate. Meenu, your name is Pratima, working with Credit Suisse, and you are a chartered accountant. And which city, Meenu? Pune. Okay, great. So Vivek, you're a BCom CACS. Wow. Experience 11 years working in International Accounting Standards Board, IASB. You're working with IASB London. Wow. So, you know, this is great. I mean, we have somebody from the IASB, you know, with us. So great, Vivek, great to have you. And I'm sure you will, there are many things that you have to share with us. You know, it'll be It will be really nice if you could give your perspective on things. Okay, great. Ashish, no, not Ashish. I have, after Vivek, I have Saurabh Rastogi. Saurabh Rastogi. Saurabh, are you there? Okay. Currently, no, this is Surbhi Agarwal. So, okay, Saurabh Rastogi. Also, uh, so you are Saurabh Rastogi or are you Surbhi Agarwal? Okay, okay, fine. So you are currently on maternity leave. You're a chartered accountant working in Big Four for 5.5 years, based out of Gurugram. Okay, which Big Four? Deloitte. Deloitte again. Deloitte India or USI India. Okay, great. Welcome, Surbhi. Alam. Uh, so I'm not very sure how to pronounce your name. Fakhare Alam. BCom and chartered accountant, having 13 years of experience working in MNC Pune. Okay. Wow. Rahul Agarwal. Rahul Agarwal. Rahul, are you there? All right, let's move on. Hitesh Verma, Karnal, Haryana, done BCom honors from University of Delhi, currently working in EY GDS as an assurance associate. Okay, great. Ajay Agarwal, BCom honors from DU Jaipur. What does that mean? Working as a tax consultant. Do you mean that you are from Jaipur and you've done your BCom from Delhi University? Okay. Working as a tax consultant. Okay. Then I have, after Ajay, I have Monica. Monica, Monica, are you there? All right. Kapil Nagpal. Hi, Kapil. You are from Ambala, Haryana. Education BCom CA in November 2010. Working in an MNC. Okay, which MNC? If you could, guys, everyone, if you could just take, I mean, if you could also tell us the name of your company, that would be nice. Okay, Monica, based out of Chandigarh, CA, and was working with Accenture as a risk analyst until Feb, and recently got married and will move to US next month. Okay, wow, great. Kapil working with an IT company. Okay. Rachyata, 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 are you there? Okay, next I have Ashima Singh. From Delhi, done BCom, not working currently. Okay. Asim Lambe, based out of Mumbai. By education, I've done my Masters of Commerce, 3.5 years of experience in internal audit. Currently working with Protivity with prior experience in EY FS Risk Consulting. Okay, okay, great. Ashish, okay, so Rachita is written, I am Ranjita Adhikari, okay, from Kathmandu, Nepal. I am a BBA graduate and is currently working as accountant in Kathmandu. Okay, Ashish, semi-qualified CA and MBA. Finance and Marketing, and from Jim Noida, done Accounting and Finance and Intellectual Property Valuation Certification course from IIM Bangalore. Wow. Currently working as a manager in Tata AIG General Insurance. Great. Kapil Nagar, BCom CA finalist working with Apex Group Investment Bank in Bangalore. Okay. Next, I have Sharmi Nayak from Navsari, qualified as Master of Commerce, pursuing CA final, not working currently. Okay. Anjali Choudhary. Anjali Choudhary from Jammu, completed MCom in 2019 from Jammu University, currently working with a CA firm in Jammu as an accountant. Okay, great. Nikhil Bad. Nikhil, have we covered you? No, we have covered Vivek Bad. Nikhil, good morning. From Hyderabad, you've done BCom. Okay, and are you working right now? Not yet. Okay, then I have Chinmay Somani. From Jaipur, recently completed CA, not currently working. Okay, great guys. We have a very diverse group, you know, a lot of chartered accountants. Okay, Chaitali Vyas from Mumbai, done CS. Wait, have I missed people? Okay, on my screen, I can only see these many people at the moment. Okay, so I had covered till Chaitali. Chaitali from Mumbai, done CS and currently working for SVC Bank for the past 7 years. Okay, welcome Chaitali. Rajat Mittal from Dehradun, qualified CA in January 21, currently not working. Okay, Jyotsna, BCom Honors, ABST from University of Rajasthan, currently MCom plus CPA, Sri Ganganagar, Rajasthan. Great. Swapan Chandra Das, ACA from Bangladesh, MCom, Chartered Accountant, location Dhaka. I'm working as General Manager Finance and Accounts in BRAC International, world #1 NGO, experience 14 years. Welcome, Swapan. Then I have Ridham Mahajan from Delhi, completed BCom from DU and working with EYGDS. Arjun from Rewari, qualified CA in 2020, postgraduate, working in CA firm as audit manager, named Agarwal Ramesh K and Company in Gurgaon. Okay. Then after Arjun, I have Mahavir. Hi, Mahavir. Mahavir from Surat, Gujarat, qualified CA, CS, and CMA. Oh, wow. Wow. You are multi-chartered, right? I have my own startup providing accounting bookkeeping services to international clients. Purpose of doing CPA is to set up my own practice, that is KPO. Great. Yeah, Arjun, so sorry I missed you. I mean, on my screen, I could only see these names, but now I have covered you. Priyanka, BCom and PG in project management, working in INGO, ICRW as finance associate, and I'm from Delhi. Okay, so what does it stand for, ICRW? Okay, then we have Nikunj Malviya, MCom, accountancy experience 2 years, company SSNC, and you're from Mumbai. Okay, Nikunj, have you also attended some other session like my sessions? CMA, have you also done CMA? Because, or it could be some other Nikunj also. Okay, Mayur Kala Kuntla. I hope I'm pronouncing it correctly. From Hyderabad. I qualified CA in 2016. Have worked with many startups in advisory role for first 3 years in transaction advisory profile, due diligence, and now working in a startup. Now floats acquired by Reliance as senior manager FP&A. Wow, so you are a startup expert, right? Uh, okay, then we have Khushbu Agarwal. Recently qualified in December 2021, done BCom honors from DU. I've also done MCom and MBA. Wow. I'm working with a CA firm in Delhi. Sunana Pawar, Masters in Finance, Jodhpur, partner in furniture firm, no work experience. Okay. So do we have two Sunanas or just one? So you are Sunana Pawar, and I thought there was one more Sunana. Okay. Mudit Sahgal, qualified CA in 2013, CS in 2010. Previous experience with Citibank and KGS into hedge fund industry for 3 years. Wow. Currently into own practice since 2017, based out of Faridabad. Okay. Then we have Elifia, semi-qualified CA, currently doing masters in US. Okay, so have you logged in from the US, Elifia? Okay, then we have Hima Nair from Mumbai, completed MCom and PGD FM, currently working in Dubai as an accountant. Saurav Tulsian, qualification BCom 2012, CA 2014, CS 2012, diploma in IFRS 2016. Wow. Work experience 8+ years, currently working in SaaS startup File based out of Bangalore, ex-ITC. Super. Co-founded a company that is primarily into mutual fund investments. Wow. So we have a very, very diverse and very talented group here. ICRW, International Center for Research on Women. Okay. So, okay. So Elifia, you have joined us from the US. Wow. So it must be like really, really late right now. Okay, Vijay Bhaskar, chartered accountant, passed in 2017, completed DISA, Kurnool, Andhra Pradesh, practicing from 2018. Prachi Kamboj, based at Gurgaon, working in Korean MNC, POSCO Steel. You are a CS, CA, Inter, MCom, LLB, experience 15 years. Saleha, I'm a CA May 2015 batch, based in Anand, Gujarat, currently working in BDO India LLP as senior associate, currently got married and will move to the US. Okay, great. Congratulations. Roshni Jacob, done CA Inter in 2015, MCom in 2021, recently joined Muthoot Finance FinCorp, Resource Financial Resource Planning team, staying in Navi Mumbai. Okay, Roshni. Yeah, Elifia, it's 11:30, so hats off to you for joining us so late. I don't know how you will manage. Well, I mean, uh, all I can say is it's commendable and it shows your dedication, right? So great. Bhattacharji, Meghanjana. Okay, so Meghanjana, this is a very familiar. You had done my audit sessions or CMA? MCom with 7 years of work experience in finance and accounting, currently working in corporate investment banking, JP Morgan. Wow. Nitesh Singhal from Ghaziabad, Uttar Pradesh, semi-qualified CA, currently working in TCS as process lead in R2R profile. Okay. Audit. Okay, you had attended the audit sessions. Nadeem CA Inter MBA Finance, working in Maruti Suzuki in Delhi. Great, guys. Thank you so much for that introduction. All I can say is, it's a very diverse group, very talented batch over here. lot of experience. If I add up everyone's experience, probably it will cross 100. I don't know, some people have for 15, 13, 11, 7, all number of years of experience. And then we have people from pretty much all over the country, and also from outside India, Nepal, then Bangladesh, then Middle East, and then USA, right? So welcome everyone. And then we have a lot of chartered accountants in the group. There's only one thing that I want to say to the chartered accountants, is that you have cracked one of the toughest exams in the world, right? CA is one of the toughest exams in the world. So that gives you a lot of confidence. But I just want to put a word of caution that sometimes, confidence can become overconfidence. So don't let that happen. Treat yourself as a student, because you're here for another exam. So for this exam, treat yourself as a student all over again. And the word of caution is that because you have studied so hard for the CA exams, there are certain concepts which are absolutely ingrained in your mind, right? They have become a part of your DNA, right? So even in your sleep, if I ask you a certain concept, maybe you will be able to tell me, right? So that is how how much you have studied for that particular exam, right? That even in your sleep you will be able to tell me a certain concept. Now that is a great thing. But sometimes in the CPA exam, what happens is when you are taking the exam, obviously there is a lot of pressure. You have to finish it on time. The clock is ticking, right? Now in that hurry and in that rush and in that pressure, what happens is out of the 4 options, one option, intuitively looks correct because you have seen it somewhere, right? So your subconscious mind tells you that this is the right answer because I have read it somewhere. Now in that pressure, right, your mind does not differentiate where you had read that information, right? Your mind says, I have read this somewhere, this is the right answer, and you click that as the right answer, as the answer. You come out of the exam hall, and this I'm sharing real experiences of people who have come and they've shared their experiences with me, that after coming out of the exam hall, when this with a piece of with a cool head, when they started thinking, they realized that that was not the right answer. That was the right answer from an Indian GAAP point of view, but that was not the right answer from a US GAAP point of view. Or that was the right answer from an Indian tax point of view, but not the right answer from US tax point of view, right? And then they realize that, oh, they have done that mistake in many questions, right? So what I'm trying to say is that when you are studying for the CPA exam, you have to unlearn to learn. Okay, unlearn what you have learned in CA and learn afresh. Okay, treat yourself as a student all over again. Okay, because this prior knowledge is good, but it can sometimes prove dangerous, if in the hurry and in the pressure of the exam you choose the wrong answer because you have read it somewhere, right? So your mind needs to be very clear as to where you have read that information. So try to unlearn, erase, okay, what you have learned, at least for the next 4 or 6 months till the time you're doing CPA. Okay, then of course, and also one more thing, don't get into comparison mode. Okay, this is treat this as a warning, or as a word of caution. Don't get into comparison mode, that okay, US GAAP says this but Indian GAAP says this, or US tax says this but Indian tax treat the same item like this. Why? Don't question it. Right now, don't get into the comparison mode. Okay, because it's going to be harmful, for you. It's going to be dangerous in the exam. Okay, right now just focus on CPA exam, just focus on US GAAP, just focus on US tax. Okay, just study for this exam, and then once you clear CPA, you have the rest of your life to do the comparisons. Okay, nobody is stopping you. You are you can do comparisons between Indian GAAP and US GAAP, IFRS and US GAAP, and whatnot. But not, this is not the right time to do that. Okay, so please refrain yourself from doing any kind of comparisons. That's the first thing I would say. uh, um, are US gaps covered in FAR? Well, the concepts are covered in FAR, but the actual the numbers, for example, the SFAS number or the ASC numbering is not part of your syllabus. Okay, Just like in tax, guys, those of you who have done regulation, you would know that, in IRC, uh, there are more than 9,000 sections, right? But in your syllabus, there are hardly 4 or 5 sections that are covered, right? 1231, 1244, 1245, 1250. There are hardly, I mean, I can count the number of sections, on my fingertips, the ones that are covered in your syllabus, right? But in overall in IRC, there are more than 9,000 sections, and there are more than 800 forms and schedules, right? But in your syllabus, they have covered only 4 or 5 sections. Similarly, the accounting standard codification is vast. It is extremely, extremely vast. It's like an ocean, right? But they have not covered the numbering over there. You don't need to know it is, FASB ASC 842 dash, whatever number. You don't need to know the numbers. Numbers are not asked in the question, in the exam. Okay. Do we have to learn the number? No. So that's what I said. You don't have to learn the numbering. And anyways, IFRS is not, so you don't have to learn the numbering of IFRS. And anyways, IFRS is not part of your syllabus anymore. It used to be, right? Now IFRS is not part of your syllabus. It's only US GAAP. And in US GAAP also, you don't need to know the numbers, the FASB ASC numbering of any topic, right? Except the ones that are given in the book, which are very, very few. Okay. And now, having said that, I just want to say one more thing before I actually, get started, with the syllabus, is that, US GAAP is vast, right? Like I said, it's like an ocean, right? And, the reason US GAAP is vast is because it is rule based. It is not principle based, right? IFRS is principle based. US GAAP is rule based, and any rule based literature is very, very vast, right? So you don't have to worry about it, right? We are just going to focus on what is required for the exam, nothing more, nothing less. Okay. So don't worry about how big US GAAP is, because we are not studying US GAAP over here, the overall US GAAP over here. We are only studying for a particular exam, for one particular paper, and there, whatever level of difficulty is covered, or whatever, concepts are covered, we are only going to limit ourselves to that. Okay. So therefore, don't worry about, how vast US GAAP is. I would like to probably draw a parallel to, and this might sound, I don't know how this will sound to you, but in the Mahabharata, right, when Arjun was asked to hit the bird with an arrow, uh, Arjun was looking only at the eye of the bird, right? Not the entire bird, right? So what I'm trying to say here is that if US GAAP is the entire bird, you don't have to look at the entire bird. You only have to focus on what is required for this exam, which is, let's say, the eye of the bird. So we will also look at only the eye of the bird. We will not look at the entire bird. Okay, because if we start looking at the entire bird, then one, we will overshoot the time. Second, we'll be wasting everyone's time and energy over here, because you are here for a purpose. You want to clear the exam in the first go with good marks. So we are going to limit ourselves to that. Okay. My introduction. So my name is Siddhartha Choudhary, and of course, I'm going to be your instructor for the financial accounting and reporting paper. I'm a qualified chartered accountant. I'm a US CPA, and I'm also a certified IFRS professional from the Institute of Chartered Accountants in England and Wales. And as far as CPA is concerned, I'm from the Colorado State Board, because when I did my CPA at that time, Colorado State Board was the only one that used to recognize chartered accountants, right? But that keeps changing from time to time. After Colorado, then California started recognizing chartered accountants, and so different state boards at different points in time recognize CAs. Some state boards don't, and so on. So that's anyway, that's a different discussion, and you will either you know it, or you will discover that when you apply for for your eligibility and all that. So yeah, I'm a CA, CS, a CA, CPA, and a certified IFRS professional. I've worked with one of the big fours, and then with a Fortune 100 company in India before moving to their headquarters at New York. I worked there for a while, and then after coming back to India, I started my own venture, which is into training, education, consulting. And as part of that venture, I have multiple clients. I do corporate trainings. I take trainings at, I've taken trainings at Deloitte, Genpact, Royal Bank of Scotland. I'm associated with Icai. There are multiple other companies where where I and my team, we deliver corporate trainings. And we are also into consulting assignments, varied consulting assignments from the Middle East and US. My company is also a training and knowledge partner of the Federation of Indian Chambers of Commerce and Industry, right? I am associated with VG sir, for a long time. And I take the financial accounting and reporting paper, the auditing and attestation paper for the CPA, and I also take CMA Part 1 and Part 2, right? But I mean at VGLD, but I take different training programs and different courses at different institutions as well as part of my venture. So that's my introduction. Uh, uh, Let me also say one thing that because like I said, I keep going back to that example of IRC. IRC has more than 9,000 sections and more than 800 forms and schedules. So it is humanly impossible for anyone to remember 9,000 sections or 800 forms, right? And I'm talking about even the senior most people at even the big fours, right? Of course, I'm not going to take anybody's name or any firm's name, but I have interacted with some very senior people at some of the big fours as well, and nobody claims to be an expert in entire IRC, right? Because it is so vast, right? So uh, uh, but luckily in this exam, it does not go into that level of depth. It also does not cover that level of breadth, right? It does not cover 9,000 sections. It covers very few sections. It does not cover high court cases, Supreme Court cases, right? uh, but coming back to the point that I've interacted with some very senior people at some of the big fours also, and nobody claims to be an expert in IRC, right? And similarly, nobody claims to be an expert in entire US GAAP, right? So people are experts in certain aspects of US GAAP, right? So what I'm trying to say is that even I am not an expert. I very humbly acknowledge that I am not an expert. But yes, I am a CA and a CPA. I have done CPA before you, so I have some level of experience as to how to crack this exam, right? And I will be happy to help you in sharing my experience, in telling you how to go through this exam, in taking you through the book, telling you what is important for the exam, what is not important, highlighting whatever is important, probably giving you notes wherever it is required, and I will not let any of your query go unresolved. Okay, even if I don't know the answer, I will look for it. I will talk to 10 people. I will search for it. Whatever needs to be done, I'll do, but I'll not let your query go unresolved. Okay, that is my endeavor, right? So uh, with that, I would just like to uh, start and wish all of you good luck for this exam. Okay, so let's get started. Unless you have any questions. After completing exams, how will we get to know US GAAP in whole? Well, there are multiple books on US GAAP, right? And you can buy any of those books and start reading the entire US GAAP. I mean, these are very, very fat, thick volumes, and not just one, maybe two. I don't know how many of you have seen Ramaiya, corporate law Ramaiya. It's almost like that. US GAAP is almost like that. These fat, absolutely fat volumes, maybe 2 volumes, 3 volumes, depending on who has which author has written it. So you get these volumes in the market, and you can start reading US GAAP once you become a CPA. Well, like I said, most people don't read the entire US GAAP because they don't need it for their job. So they only read the portion that is required for their job. Like for example, insurance people will only read the insurance, the insurance accounting, and except for maybe the people in the in the big fours and all, they might have to they would have to obviously go through the entire thing because they are auditing, different companies at different times. But even in the big fours, that is why you have industry wise verticals, because one person cannot have knowledge of everything, right? So that's the idea. Any chances of CAs getting exemption for exams in CPA in coming future, like we have in ACCA? No, no. Uh, I don't see that happening anytime soon, or even in the long term, because the whole idea of this exam is that everyone needs to go through the 4 papers, whether you are a BCom, whether you are a PhD, right? Whether you are an American or not an American. So it does not distinguish or differentiate between people, right? So in that sense, I would say it is an equal opportunity exam, right? So everybody has to go through the same set of four papers, and that is why this qualification holds so much value. Okay, since you have brought out this point, let me quickly talk about it, just spend a minute on that. That in the exams that have exemptions, they are not truly valuable. This is my personal opinion, of course I could be wrong, but they don't hold true value in the market. Because think of it logically. If, let's say, if there is an Indian company that has one position in its finance and accounts department, and 2 people have applied. One person is an Indian chartered accountant who has appeared for all the exams, right? He's like a full-fledged Indian chartered accountant, right? And another person is, let's say, a CA from South Africa, who is also a member of the Institute of Chartered Accountants of India by virtue of an MOU, right? He's not an Indian chartered accountant. He's a chartered accountant from South Africa, but he's also a member of Icai by virtue of the MOU. Okay, I'm just giving an hypothetical example over here. Now, there's an Indian company. There's one position in the finance and accounts team for which these 2 people have applied. Who will you hire? The Indian chartered accountant or the South African guy who is a member of ICI by virtue of MOU? Who will you hire? Tell me honestly. Who will you hire? Most likely you will hire the Indian chartered accountant, right? Because it's an Indian company and he's an Indian chartered accountant. So that guy has the knowledge of the Indian legal regulatory environment. That guy has the knowledge of the Indian GAAP environment. That guy has the knowledge of the Indian tax environment, right? Which the South African guy may not have, right? Because he has not appeared for all the exams of the Indian CA course, right? So, but he's a member of ICI by virtue of the MOU. That's about it. He may not have the entire knowledge like the full-fledged Indian chartered accountant has, right? So most likely you are going to hire the Indian CA. Similarly, if you are applying for a job in the US, right, and you are an Indian, Indian guy, like qualified from India, whether CA or not, you are an Indian guy who has applied, and there is a American CPA who has applied, right? So who are they going to hire? Most likely the American CPA, right? So that is why to be considered at par, if you have also taken the same set of exams like that other guy, you have also taken 4 papers and he has also taken 4 papers, then you are truly at par with that guy. And now when you apply for a position, you will be considered equally, right? uh, I hope you get my point, right? If somebody has cleared 14 papers and you have cleared only 2 papers, right, you are not really at par, right? In terms of, I'm not saying in terms of knowledge, you may have more knowledge than that guy. I'm not doubting that or questioning that. But what I'm saying is that to be relevant in that environment, right? In that ecosystem, in that environment, do you really have the, the legal, regulatory, gap, tax knowledge of that country, right? So let's say when you become a Canadian CA by virtue of an MOU between Indian Institute and the Canadian Institute, do you really gain that insight or that knowledge of the entire Canadian ecosystem? The answer is no, right? So when you are applying to a Canadian company, they will prefer a Canadian, full-fledged Canadian chartered accountant than you, right? So therefore, the exams that give you exemptions are good to have. I'm not saying they're good to have, but they may not hold true value in the marketplace. But when you are equally, when you have taken an exam which is at par with everyone else, that holds true value. That is why the American CPA program holds, it is acceptable, globally acceptable, pretty much everywhere in the world. When I say globally, it truly is globally, right? Anywhere in the world, it is accepted. And the reason for that is this, that there are no exemptions. Like one of the reasons, right? So, well, Arjun, yes, of course, if that South African guy has better knowledge than the Indian chartered accountant about Indian environment, then of course you will hire. I'm not denying that. But I'm saying that it is unlikely that that guy will have more knowledge than an Indian chartered accountant about India, about the Indian environment, right? Alifia, so you're saying, does AICPA provide material for CPA like Icai? I have heard about questions, but never heard. No, AICPA does not provide material. Unfortunately, AICPA does not provide material, and therefore you have to go with a private provider. And Becker is one of the best and one of the oldest, right? So, okay, guys. So, any further questions? There is no 10-year questionnaire, but AICPA keeps on releasing questions from time to time, Arjun. So you can go through those questions, right? And they come with answers. Okay. All right. So now just give me a moment. Okay, let me open the module and then we get started. Are there options to study in respect of books? Well, I'm not very clear about your question. Or only Becker? No, Becker is one of the providers. But Becker is considered to be the best, and it is also one of the oldest, right? So it is like really time tested. Like I don't know how many hundreds or lakhs of students have cleared the CPA exam by studying Becker. you know when I did my CPA, I also studied Becker, right? So Becker is no doubt one of the best, or I can safely say it is the best. But there are other providers, right? uh, can we get source or links of those questions released by AICPA? Yes, our admin team will help you with that. In fact, they keep posting those links, in the WhatsApp groups or the Telegram groups from time to time. Okay, but I would say that don't go through the questions now, because it's probably you will not get the answers right, and that will demoralize you. So don't even attempt right now. First, go through the syllabus. Like I said, do your 2 or 3 revisions or 4 revisions. Cross 90 at least of in the Becker software questions. Cross 90. Then then maybe you can try the AICPA questions. Not before that. Okay. See, there is a method to this. Don't try to jump the steps. Okay, otherwise don't get impatient. There is a certain level of patience that will be required to crack this exam. Okay, at the end of the day, this is a professional exam and it is the highest accounting credential in the United States. So give it the time that it needs. Okay, don't try to jump things, otherwise it's not going to help you. Yeah. Okay. Yeah. Yeah, Sunaina, there are multiple providers. You see, there are multiple providers out there in the marketplace. Uh, but like I said, Becker is considered to be the best. Now, that's all I can say. Of course, you can explore other ones, but let me also tell you, sometimes students say that, is Becker enough? Should we do other things apart from Becker? My honest opinion, right? And I could be biased. I could be biased because I cleared the exam by studying Becker. Okay, I did not refer to anything else. So my opinion could be biased. But it's not just me. I have seen so many other students clearing the exam just by studying Becker. So my opinion is that you don't need to look at anything else. Becker material itself is so vast that you won't have time. See, I would say that even if you have to look at something else, first complete the Becker book 2-3 times. Okay, do all the MCQs 2-3 times, do all the simulations 2-3 times, cross 90. And then, if you feel that you still have more time to do other things, then go ahead and do other things. But if you have not even done what you have in hand, right, then, basically you are wasting your time. Honestly, you don't need to go through anything else unless and until you have done whatever you have in hand, you have done that properly first. Okay. Like they say, a bird in hand is better than two in the bush, right? So you have multiple providers in the market, but if you go through each one of them, um, but none of them thoroughly, you go through each one of them at a surface level, but none of them thoroughly, then it's not going to help you. Just pick one and go through that thoroughly. Okay. Concepts from Indian CA, concepts from Indian CA material can help. I'm not a CA. No, Sunana, if you heard me correctly, in fact, I gave a warning to the CA students as well to unlearn what they have learned in CA and start afresh, treat themselves as as fresh students all over again, right? Because whatever you will cover in the CA material will be from an Indian GAAP, Indian tax point of view, right? Which may not be the right thing as per US GAAP or US tax point of view. So you may end up giving the wrong answer in the exam, right? Because in the exam, like I said, there's a lot of pressure, right? There's a lot of pressure on you, right? Because the clock is ticking, you have a tough question on your screen, you know, uh, at that moment, your brain is probably not able to differentiate where you have read the information, right? It just tells you that I have read this information, this is the right answer, right? So therefore, it is very important to unlearn, to learn this, unlearn the past and to learn the new. Okay. Okay, just wanted to check module 1 is 4.0. Is there any upgrade in it, or this is the only one? Well, it's 4.1 version right now. Okay, but even if you have 4.0, you have nothing to worry because there are no additions. There are only deletions, right? So certain topics have been taken out. So, so just cross out those topics. That's all. So you have nothing to worry. There are no additions from 4.0 to 4.1. Are there any amendments in FAR? Like I said, from 4.0 to 4.1, right? There are only deletions. There are no additions. Okay. All right, guys. So if there are no other questions, let's get started. Just give me a moment. Let me open the module and then I'll share the screen again. Okay. Just give me a moment. Okay, so I'm sharing the screen now and let's get started. While I'm covering a particular topic, if you have any questions, please keep noting them in your notebook. Okay. Uh, and then maybe you can post those queries in one go, all the queries of that module in one go. Okay. Can everyone see my screen here? I'm on like the index page of the first chapter. You can see the screen. All right. So this is the first chapter, Conceptual Framework and Financial Reporting. That's the name of the chapter. Like I said, there are 10 chapters, right? This is the first one, Conceptual Framework and Financial Reporting. In this chapter, there are 8 modules. Okay, so these are called modules. Module 1, standards and conceptual framework, income statement and balance sheet, revenue recognition part 1, part 2, income statement, discontinued operations, then accounting changes and error corrections, statement of comprehensive income, and adjusting journal entries. Right, so it's a very basic sort of a chapter, nothing very technical over here, except the revenue recognition part that could be slightly technical. Other than that, it's a very simple chapter. Now I'm using the instructor version where the important lines have already been underlined. You have the student version, so you have to manually underline and highlight what I highlight. Okay, the underline, you can already see it's there, but I'll also highlight things, so you will have to do that manually. So if you don't have today, from tomorrow, make sure you have a pencil, you have an highlighter, and maybe you have a red pen, okay, with you when you sit down to study, okay, for the class and otherwise. All right, so the first module is standards and conceptual framework. Now before I start reading from the book, let me quickly give you a background to this. See, this basically it starts from how accounting profession evolved in the United States, right? So which bodies came at different bodies came at different points in time, and they were kind of regulating the accounting profession, right? And so what we are going to study here is which body came at which time, what kind of pronouncements they brought about, and then what is the latest, what is the status now, right? When we say US GAAP, what do we really mean by this term US GAAP? What are we actually referring to? Are we referring to the statement of financial accounting concepts? Are we referring to the statements on financial accounting standards? Are we referring to regulation SX of SEC? What are we really referring to when we say US GAAP says this or US GAAP treats this item like this? What do we really mean by that? Okay, so that is one aspect of that is one aspect that we are going to look at, that how the accounting profession developed or evolved in the United States. Then of course we are also going to look at how an amendment is brought about, right, in a particular US GAAP, how an amendment is brought about or how a new US GAAP is brought about. Okay, then of course we are going to look at these SFACs, the statements on financial accounting concepts. Okay, so we are going to look at how many SFACs are there, and which ones have been repealed and which ones are still in still in practice, still in use, and what are those SFACs talking about. So module 1 is pretty much on these 2-3 things: how the accounting profession developed or evolved in the US, what is the standard setting process, how do you create a US GAAP or make an amendment to a US GAAP, and then the SFACs, right? So pretty much these are the 3 things that we are going to study in the first module. And like I said, I'm going to take you line by line. So if you see here, the very first line: in the United States, SEC, the Securities and Exchange Commission, has the legal authority to establish US GAAP. Very, very important line. From this first line itself, you can get a question in the exam. Who has the legal authority to establish US GAAP? It's SEC. Okay, SEC has the legal authority to establish US GAAP. But look at the next line. However, in most instances, SEC has allowed the accounting profession to establish GAAP and self-regulate, right? So SEC has the legal authority, but SEC has, has allowed the accounting profession to self-regulate itself. That you guys make your own standards and you guys follow your own standards. So do self-regulate yourself, right? So, however, in most instances, SEC has allowed the accounting profession to establish GAAP and self-regulate. SEC and 3 different bodies of accounting profession have determined GAAP since 1934. Let me quickly take you through this page, and then we will summarize it. So SEC was established by the Securities Exchange Act of 1934. All companies that issue securities in the US are subject to SEC rules and regulations, right? SEC has issued public company specific, public company, right? Those who issue securities. So SEC has issued public company specific accounting rules and regulations in regulation SX. Then also they have issued financial reporting releases, accounting series releases, interpretative releases, staff accounting bulletins, EITF topic D, not the entire EITF. EITF stands for Emerging Issues Task Force. So Emerging Issues Task Force, okay, they come out with these pronouncements. So EITF topic D has been issued by SEC and SEC observer comments. Now, what is important here is, which year the SEC was established, who has the legal authority to establish GAAP in the United States? It's the SEC, right? And then what are the pronouncements SEC has come out with? So regulation SX, FRR, ASR, IR, interpretative releases, staff accounting bulletins, SABs, EITF topic D, SEC observer comments. Now, see, you don't have to memorize this list, but when you see 4 items in a question, you should be able to identify out of these which 3 were part of the list, right? So if I tell you accounting series releases, staff accounting bulletins, EITF topic D, you know immediately that yes, it was part of the SEC list. SEC has come out with these pronouncements. Okay, so to that extent, you should be able to remember that after looking at the answer choices, you should be able to identify whether this was a part of the list or not part of that list. Okay, next in 1939, the Committee on Accounting Procedure was formed, right? It was a part-time committee of the AICPA. Part-time committee of AICPA, right? That promulgated ARBs, Accounting Research Bulletins, which determined GAAP from 1939 to 59. Okay, so like we discussed, SEC allowed the accounting profession to self-regulate. So AICPA, they formed a part-time committee, called it the Committee on Accounting Procedure, and that committee came out with accounting research bulletins, which determined GAAP from 39 to 59. Then in 59, APB was formed. Accounting Principles Board was another part-time committee of the AICPA. It issued Accounting Principles Board Opinions, APBOs, and APB Interpretations, which determined GAAP from 59 to 73. Okay. Then in 73, FASB was formed. In 1973, an independent full-time organization. So this is the first time a full-time organization was formed. Before this, there were part-time committees of AICPA, right? CAP and APBs were part-time committees. This was the first time an independent full-time organization was formed, which was called Financial Accounting Standards Board. FASB was established, and it has determined gaps since then. Through 2009. So here through means till, to or till. So to 2009 or till 2009, FASB issued statements on financial accounting standards, SFAS, FASB interpretations, FIN, FASB technical bulletins, FTBs, emerging issues task force statements, EITF, FASB staff positions, FASB implementation guides, statements of financial accounting concepts, right? So FASB, if you see here, FASB, because it was a full-time organization, it was fully dedicated to regulating the accounting profession. It came out with so many pronouncements, right? Before this, the part-time committees only came out with a couple, right? For example, the CAP, Committee on Accounting Procedure, only came out with accounting research bulletins. That's it. In its 20 years, 39 to 59, right? It came out only with accounting research bulletins. APB came out only with APBOs and APB interpretations. That's it, from 59 to 73. But then FASB came out with a lot of pronouncements, SFAS, interpretations, technical bulletins, EITF statements, staff positions, implementation guides, statement of financial accounting concepts, right? FASB has 7 full-time members who serve for 5-year terms and may be reappointed to 1 additional 5-year term. That means at most a person can serve as a member of FASB for maximum 10 years, 5 plus an additional 5. Board members must sever connections with firms or institutions before joining the board. That means if they are a partner of a firm, they must resign from the firm to become a member of FASB. And then once they have completed their term in FASB, they can go back to their firm and become a partner again. Right. So that is, of course, their understanding with their firm. But the point is that they have to resign from their current employment or current engagements to become member of FASB, because they are going to be full-time members and it's an independent full-time organization, right? So therefore they have to sever their connection with their firms. Okay. Now this happened till 2009. Then in 2009, vast number of standards issued. So before I go to the next para, let me take a pause here. And if you notice, right, let's also quickly make a note here. And I mean, you can copy it if you want. If I draw a timeline, 1934, okay, SEC was formed. Then 1939, Committee on Accounting Procedure. Then 1959, APB. Then 1973, FASB. And then 2009 was FASB Accounting Standard Codification, ASC, and which is the current status as well. No change after this. So last change was in 2009 when FASB Accounting Standard Codification was formed, right? SEC has come out with, so you can make a list over here. What are the pronouncements SEC came out with? CAP came out with only only one. APBO came out with 2. FASB came out with multiple of them. And now we'll talk about FASB ASC. Now, before I talk about FASB ASC, do you see any pattern over here, or is there any observation over here? 1934, 39, and then straight 59, and then 73, and then 2009. Why? Why from 39 to 59 and then 59 to 73? And then why 2009? The point I'm trying to make here is that, US historically has been a reactive economy, right? So whenever something happened, they took a step. So it has not been proactive, it has been reactive, right? So in the 1930s, there was Great Depression, and suddenly a need was felt that the accounting profession needs to be regulated. How come we did not exactly, Ajay? So the world wars and the recession, the Great Depression of the 1930s, right? So there was a question in the minds of the economists and the accountants as to why we could not predict this, that this is coming, right? That we are going to face a Great Depression. That means, our profession needs to be regulated more, and there has to be some uniformity, some kind of consistency. We all have to follow the same principles. Let's form a body that will regulate our profession. So SEC was formed, right? So therefore SEC has the legal authority to establish GAAP in the United States, and even today SEC has the legal authority. It's a different matter that SEC does not indulge into this. SEC does not get into, the formation of the standards and all that. But legal authority, even till date, SEC has the legal authority, right? But SEC obviously allowed the accounting profession to self-regulate. Having said that, SEC also came out with certain pronouncements like Regulation SX and stuff like that. So in 39, CAP was formed. 59, APB was formed. 73, first time a full-time organization was formed. Why? Because in the 1970s, late 60s and 70s, there were a lot of scams and lot of frauds that happened in the United States, right? The Watergate scandal, and there were certain scams and scandals that even the president of the United States was involved in, right? You must be knowing, if you have some knowledge of the US history. So, a need was felt that so, Arjun, let's not get into the specifics of what those scandals were, but the point is that, there were certain scams and scandals that happened in the late 60s and 70s. And again, a need was felt that, these part-time committees are not doing justice to the profession. We need a full-time body, right? So because of that, like I said, US has been a reactive economy. It has, not been proactive. So when something happens, they take a step. So when all these scams and scandals happened, they thought that, part-time committees are not helping. Let's form a full-time organization that will regulate the profession. So from 73 till 2000, till late 2000s, that happened. But again, we all know that in 2008, there was, a recession, right? This subprime lending created, so there was a complete recession and a complete breakdown in the economy. So again, a need was felt that, okay, maybe we have to do something more, right? And FASB ASC was formed. Now, what is FASB ASC? Let me quickly talk about it. Let me go back to the notes page. So at different times, different bodies came. They came out with their own, literature, their own pronouncements. Now there was a lot of confusion as to which one is still applicable, which one is not applicable, which one overrides the other, and therefore a need was felt that we need to have one place where we will house everything, and that will be called US GAAP. Right now, is this pronouncement which is issued by CAP, I'm talking about pre 2009, a state of confusion that do we have to follow this pronouncement issued by CAP even now, or do we just follow what has been issued by FASB? Does this pronouncement override this pronouncement, or this one overrides this one? There was a lot of confusion. So what they said was, let's do one thing. Let's create one place where everything will be called GAAP. So a FASB accounting standard codification was formed, and what FASB ASC did was nothing but it brought everything into one umbrella, under one umbrella. So it said, we will pick this, we will pick this, we will pick this, and we will pick this. We will bring it here as part of ASC. We will pick this, we will bring this also as part of ASC. We will bring this and bring this also and make it a part of accounting standard codification. We'll bring this, we'll bring this, we'll bring this, we'll bring this. We'll bring all of this into the accounting standard codification. So if you look at the list of accounting standard codification, it is nothing but a compilation of all the pronouncements issued by all the previous bodies, right? So this list obviously is huge because it's a combination of all the pronouncements of all the bodies, including the SEC pronouncements, right? The only thing that they did not pick up was the SFACs, the statements on financial accounting concepts. This was not picked and not made part of the FASB ASC. Okay, and I'll talk about that. I'll come to this point in slightly more detail in just a moment. But what I'm trying to say here is that FASB ASC is nothing but a combination or a compilation or I'm not getting the right word, but it's basically a summation, of everything that was issued by the previous bodies. Okay, so if I go back to the page, right from the top, right? So if I come to this page right from the top, and if I ask a question that is regulation SX part of FASB ASC, answer is yes. Is financial reporting releases part of FASB ASC? Answer is yes. Accounting series releases? Yes. Interpretative releases? Yes. Staff accounting bulletins? Yes. EITF topic D? Yes. Okay. Is accounting research bulletins a part of FASB ASC? Yes. Are APBOs part of FASB ASC? Yes. Interpretations? Yes. So basically, everything has been now put under one umbrella. Similarly here, statement of financial accounting concepts, yes. financial FASB interpretations, yes. FASB technical bulletins, yes. Not the entire EITF statements. Okay, let me also highlight this. Entire EITF statements has not been taken by FASB ASC. It is only EITF topic D that has been taken by FASB ASC. Okay, not the entire EITF statements. Then FASB staff position, yes. Implementation guides, yes. And again, statement of financial accounting concepts, no. Okay, so barring these two, everything else is now part of FASB accounting standard codification. So before I read this para one more time, I'm going into the notes page. Okay, so you will also write the name of the pronouncements here where I have put the bullet points. What I'm trying to say here is that now FASB ASC has everything except SFAC. Whatever is under FASB ASC is technically called US GAAP. Whatever is not part of FASB ASC is technically not called US GAAP. That means if I ask you a question, is SFAC GAAP? Yes or no? Is SFAC GAAP? Answer is no. SFAC is not GAAP. Technically speaking, SFACs are not GAAP because they are not part of the FASB ASC now. Okay. Now, you must be wondering, what is this FASB ASC, right? Now, of course, this is just for your understanding. I am explaining this. I mean, I'm explaining it this way, right? Please don't quote me anywhere, or please don't write this anywhere. Even though, I mean, anyways, there is no scope of writing in the exam, right? It's all at the click of mouse. There is no scope for writing anything except in the written communication section of BEC. But don't quote me anywhere, or don't write this anywhere. This is just for your understanding as to what FASB ASC really is, right? So imagine, think of it like a building, right? This is the building of FASB. Now, suppose the chairman of FASB sits on the top floor. The full-time members, the other full-time members sit on the next floor. This is the ground floor. This is the reception. I'm just creating an imaginary thing. And let's say this is the floor where the staff sits, and this floor, the one which is wider. Okay, so let's say 1, 2. Okay, this is the chairman's office. Chairperson. Okay, now so it's not called chairman anymore. Chairperson's office. This is the full-time members. Full-time members, right? This is the staff. This is the security and reception and security. This is the library. Just like you go to any library, your school had a library, your college had a library. In this library, okay, I'm just saying, just to explain this, okay? In this library, there are books. There are racks, and in those racks, there are books. Okay, let's say these are racks, and in this, there are books. Whatever. You pull out a book. That book is SFAS. You pull out another book. It's called FASB Technical Bulletins. You pull out another book. It's called FASB Interpretations. You pull out another book. It's called Staff Accounting Bulletins. So it is nothing but a library where all these books have been kept. Think of it like this. So in 2000, so we are saying that in 2009, FASB ASC was formed. Are we saying that FASB does not exist anymore? Answer is no. FASB still exists. FASB still exists, but the only point is that we have created a kind of a library where all the pronouncements are placed. And now this library is called the US GAAP library. This is the US GAAP. Whatever book is in this library is called US GAAP. Whichever book is not in this library is not US GAAP. As simple as that. Again, this is just for your understanding. I have created this. Don't write this anywhere or don't quote me anywhere on this. Okay, is it clear that FASB ASC is nothing but basically a collection of all the pronouncements? FASB as a body still exists. FASB as a building or as an office still exists, right? It's not that it's not that, it's not like these. Here what happened was when APB was formed, CAP was dissolved. Okay, CAP was dissolved, APB was formed. When FASB was formed, APB was dissolved and FASB was formed. But in FASB ASC's case, FASB was not dissolved. FASB still exists. Okay, is that clear, guys? Everything except SFACs and EITF topic D are part of US GAAP. Other than topic D, yes. Everything except SFAC and EITF are part of US GAAP. EITF topic D is part of US GAAP. You're absolutely right, Vivek. Accounting standard codification. Well, codification means you have codified something. That means now it is your code, right? Just like you have this uniform civil code, or any kind of law is called a code. You have IRC, the Internal Revenue Code, right? So codification means you have made it into a kind of, if I may use the word, you have made it into a law, right? That means, whatever is under whatever is under the accounting standard codification has authoritative status and companies need to follow that. Okay. EITF topic D is part of FASB ASC. Yes, EITF topic D is part of FASB ASC. So now let's read the last para. The vast number of standards issued by the Committee on Accounting Procedures, the Accounting Principles Board, Financial Accounting Standards Board, as well as additional guidance provided by SEC and AICPA made it difficult for users to access the full body of GAAP. Therefore, effective July 1 to 2009, FASB Accounting Standard Codification became the single source of authoritative non-governmental US GAAP accounting and financial reporting practices not included in the codification are not GAAP, right? So accounting and financial reporting practices not included in the codification are not GAAP. Correct? We have discussed that. I just want to highlight one more thing here. Now, after 2009, after July 1, 2009, I've said this before, anything that falls under FASB ASC is GAAP. Anything that does not fall under FASB ASC is not GAAP. Therefore, FASB ASC is the single source of GAAP, right? Therefore, this word single source of authoritative US GAAP. Now, there is one word which is left to be explained, which is non-governmental. That means we are only talking about non-governmental entities. For governmental entities, there is GASB. That comes out with pronouncements which are applicable to government entities. Government Accounting Standards Board. Okay. Therefore, anything to do with the government, we will refer to GASB. Anything to do with non-government is FASB. FASB, but FASB what? FASB Accounting Standards Codification. Is that clear? No, see, whatever is not in the book, you don't need to know. Okay, Vivek, so you don't need to know when AICPA was formed. You will get to know if you have done regulation, you will get to know it there. Okay, but as far as FAR is concerned, you don't need to. So repeat about the governmental thing. See, for non-governmental entities, they will follow FASB. For governmental entities, they will follow GASB. So when I say FASB, that means FASB ASC. So FASB ASC is applicable for non-governmental entities. For governmental entities, they will have to follow the GASB pronouncements. Is that clear, Carvi? Okay, now Arjun, your question, do we need to learn? Like I said, you don't need to, there is no rote learning that is required. You don't have to kind of memorize it like, like a parrot. Okay. But you need to know which pronouncement was issued by which body, so that in the exam, when you see 4 options, you are able to identify. We will learn about both. Yes, we will learn. There is a separate chapter on governmental accounting. We will learn about GASB there. All right, guys. So let's proceed. We are done with the first page. Now, first couple of chapters are there's a lot of theory, right? So please bear with me. Practicals will start from chapter 3 onwards, pretty much, and then it's going to become pretty interesting. Right now, it's theory. We are getting to know, this is all history of accounting, right? History of the accounting profession in the US. EITF is both on SEC and FASB. Well, EITF topic D was issued by SEC, which has been adopted by the FASB ASC. So EITF topic D is part of FASB ASC. The rest of the EITF, the other topics of EITF are not part of FASB ASC. They have been issued by FASB, but they are not part of FASB ASC. Is that okay? HP. HP, what's your name? Pratim. Okay. All right. So let's move on. Private Company Council. Now, see, Private Company Council is basically, for private companies, because we just saw that, SEC was formed, and SEC is basically for public companies, where companies that issue securities to the public, right? And those that are listed in a stock exchange, in a stock exchange, whether it is New York Stock Exchange, whether it is NASDAQ, those that are listed in a stock exchange are registered with SEC. What about companies that are not, right? So basically we are talking about privately held companies, right? So for them, there is basically the Financial Accounting Foundation, FAF. It created the Private Company Council to improve standard setting for privately held companies. Now see, like I said, US GAAP is extremely vast, right? And you have just seen the list of pronouncements. There are so many pronouncements that are there, and then these pronouncements are themselves pretty huge. They are cumbersome, right? So for a small company, following all the entire US GAAP may be a very, very time consuming and a costly affair. A company that has just started, it is a privately held company, maybe its turnover is very little. I'm just saying that for a small company, following the entire set of rules under US GAAP may not be practically feasible and economically viable, right? So therefore, recognizing this fact, what they have done is they have come out with a Private Company Council, and they have said that, okay, fine, if you are a privately held company, you are not dealing with public money, you don't need to follow all the US GAAP rules. We will relax the rules for you. Okay, we will exempt a lot of things for you. We will waive off a lot of things for you. We'll make it easy for you. It will be cost effective, and it will be quick. It will be more efficient. Okay, so with that in mind, let's read the next para. FAF created PCC for privately held companies in the US. The goal of PCC is to establish alternative to US GAAP. Okay, to establish alternatives to US GAAP wherever appropriate, create an alternative to make private company financial statements more relevant, less complex, and cost beneficial. Accounting alternatives for private companies are incorporated into the relevant sections of the ASC, right? So wherever ASC talks about a certain thing, it also says that for private companies, they need to just follow this, or they have an alternative to do it like this, right? So it is incorporated into the ASC itself. Self-regulation means that SEC is not going to watch over them. They will form their own rules and follow their own rules. That is what self-regulation means. And therefore, when you file with the SEC, I don't know if you know this or not, when you file with the SEC does not question the integrity of your financial statements. SEC does not get into the authenticity or the accuracy of your financial statements. It only looks at the completeness. Like, just imagine if you are filling a form and if there are 10 fields and you submit it to me, and I am only looking at whether you have filled all the 10 fields or not. That is the job SEC does. It only looks at the completeness, that okay, if you were required to fill 10 fields in a form, have you filled all the 10 fields? Now, whether you have filled those fields correctly or not, SEC does not go into that. Okay. And that's why you have independent CPAs who come and audit your financials, right? So SEC does not audit financials. SEC does not look into the accuracy of the financials. It only looks at the completeness aspect, right? So SEC does not regulate the accounting profession, so to say. It has allowed the accounting profession to self-regulate. That means you form your own rules and you follow your rules, right? And only you file with us, right? So that we know that you are following. That's it. Is that clear? Now, see, Mayur, questions that are not covered in the book, let's not get into those. Like I said, otherwise, we will digress from the real thing and we will start discussing other things. Now, whether FAF is under FASB or not is not given in the book, so don't bother about it. But yes, since you have asked the question, I will answer. FAF does not come under FASB. FAF is a financial accounting foundation. It's a separate body. Okay. Is PCC making accounting standards for private companies? Arjun, yes. PCC, basically the idea of having PCC is to make the accounting standard, I mean the gap, whatever gap requirement, whether it is an accounting standard, whether it is interpretation, whether it is a observer comment, whether it is a accounting bulletin, whatever it is, whatever is US gap, that means whatever comes under FASB, ASC, what they do is they try to make it less complex for private companies, right? Is that clear, guys? Okay. Ongoing standard setting process, right? How do you amend a US gap, or how do you bring a new US gap into picture? FASB updates the accounting standards codification. Now see, the proof that FASB still exists, because it says FASB updates, right? So FASB as a body still exists, and FASB updates the accounting standard codification for new US GAAP issued by FASB, right? Issued by FASB, and for amendments to the SEC content with accounting standard updates, right? So they are called accounting standard updates, but accounting standard updates are not authoritative literature. Now you need to understand this. Accounting standard updates do not have an authoritative status. That means until and unless it is incorporated into the accounting standard codification, it does not gain authoritative status. Only when it is finally incorporated into the accounting standard codification does it become mandatory. Okay, before that, it does not have authoritative status, means it is not mandatory at this stage. Once it is incorporated into the accounting standard codification, it becomes mandatory for companies to follow. FAF only creates the council, not part of FASB. Well, like I said, don't get into too much of details. FAF, the Financial Accounting Foundation, created the private company council, okay, for this particular purpose that we just discussed. Okay, just leave it to that. Whether FAF is part of FASB, not part of FASB, what is it? What are its other functions? Does it create other councils? What do those councils do? don't get into those much details, right? Because anyways your book is very, very fat. You know, whatever is covered in the book, you will struggle to cover that only. Forget about what is not there in the book, right? Like I said, US gap, you know, if you have to study the entire US gap, it comes in thick volumes, 3-4 books. It's a set of 3-4 books and comes in thick volumes, right? We are not going to get into that much detail for this exam. It's not required. Okay, so please stick to what is required for the exam. Okay, because I also have a limited time to cover everything. Okay, and I'll also be doing MCQs with you, simulations with you, and cover the entire book with you. Okay, so let's please stick only to the book. What does amendments to the SEC content mean? uh, Amendments to the SEC content means, of course, if there is any change that you need to bring about, you want to repeal something, you want to delete something, you want to add something, you want to change something, any kind of change is called an amendment, right? So if you want to bring about, you as in FASB, I'm talking about, if FASB wants to bring about any change in any of the SEC content, it can do so through an accounting standard update. But accounting standard updates are not mandatory, they are not authoritative. They become mandatory once they are incorporated into the accounting standard codification, right? That means, you know, if in my example, when that book enters the library, it becomes US GAAP. Before that, till the time it is outside the library, you know, I mean, it is not part of the library, it is not GAAP. Okay. SEC amendments which are fully integrated, regulation SX, Arjun, regulation SX is was issued by SEC, but it has been adopted by the accounting standard codification. Similarly, uh, you know, all those names that you saw in the first page. The accounting series releases, the interpretative releases, the staff accounting bulletins, right? These are all issued by SEC originally, but now they are part of the accounting standard codification. Okay. Okay, so I was on this paragraph here. Sorry. Does it mean FASB amends the SEC pronouncements? Only the ones that are part of FASB ASC. The SEC pronouncements that are not part of FASB ASC cannot be amended by FASB, because obviously they don't have the authority to do. Like, you cannot change other people's literature. You can only change the literature that you own. So only those literature that are part of FASB ASC can be amended by FASB. Is that clear? So Nana, 1 point, what do you mean by 1.4? The para number? Okay, yeah. So I was on this para. So proposed FASB amendments to AC are issued for public comments in the form of exposure drafts. Okay, public comments in the form of exposure drafts. A majority vote of the board members is required. Very, very important. Majority vote of the board is required to approve an exposure draft for issuance. At the end of the exposure draft public comment period, FASB staff analyzes and studies all the comment letters and position papers, and then the board re-deliberates the issue. When the board is satisfied that all reasonable alternatives have been adequately considered, FASB staff prepares an accounting standards update, again for board consideration, and again a majority vote of the board members is required to amend the ASC. Now, what does this para mean? Let me quickly explain. So if we have to amend, let's say, a US GAAP, like FASB has to amend a US GAAP, what will it do? The staff of FASB will prepare an exposure draft. This exposure draft will be presented to the board. The board will give a majority approval. Majority of the board will approve it. Okay. Then it will go for public comments. Okay, majority vote of board. Then it will go for public comments. Now, once the public has commented, now here public does not mean public, okay? Public does not mean anybody walking on the street and we call that guy, and say, excuse me, can you please read this exposure draft and say, does it look fine to you? Obviously, public does not here mean general public. Public here means, you know, uh, the uh, uh, basically the industry forums, okay, the big fours, then the relevant ministries, right, of the government. Uh, it could mean chambers of commerce, right? So it's basically, you know, the most important public, you know, in the public, this terminology public, the most important stakeholder is the industry that is going to be impacted by that US gap. Okay, so if there is a new US gap coming on oil and gas industry, then the oil and gas industry representation is the most important. That means when we say public comments, they will go through this exposure draft and say whether it is, you know, whether it is good or not. I mean, does it cover everything that is required or not? Does it need any changes? Okay, so they will give their comments. Okay, public comments. So chambers of commerce, industry forums, or lobbies, if I may say. Then of course the relevant ministries of the government, then also the consulting firms, the big fours could be, you know, could be also, uh, you know, called for their advice. Okay, so when it goes for public comments, when the public has given their comments, then the staff makes changes. Okay, the staff makes changes. Staff makes changes. Then, since I don't have space, I'm using it like this. Then the board will satisfy itself. Board satisfies itself that all the comments have been considered. All comments, it is not necessary that all the comments will be incorporated, or whatever the public has suggested, it will be incorporated, but at least they have been considered, right? That all comments have been adequately considered. And whichever were required to be incorporated have been incorporated, whichever were not required to be incorporated have not been incorporated. So board will satisfy, there is no voting happening at this stage, but the board will just satisfy itself that yes, it has been. And then an accounting standards update will be formed. This accounting standard update will again be presented to the board for their majority vote. And when this second time, when the board gives its majority approval, will it get incorporated in the ASC? Then it will be incorporated. So incorporated in FASB ASC. So ASU, remember we said that ASU, accounting standard update, is not authoritative because it has not received the majority approval of the board. So it is not authoritative. But once it is incorporated into the ASC, it becomes authoritative literature. Is that clear now? So now you can get questions on this, 2 or 3 types of questions on this. One type of question is, how many times does it go to the board for approval? Once, twice, 3 times, 4 times. Okay, option A, option B, option C, option D. The answer is, it goes to the board for approval twice. Okay, answer is 2. What kind of approval is required? Majority approval is required. Okay, then, so majority vote means, you know, how many members does the board have? You know, and you can simply do the calculation, the majority out of them, right? So we just saw that it has 7 full-time members. That means 4 of them must vote for this and 3 can vote against it, right? So it's a simple majority vote. How many times does it go? What kind of approval is required? Majority approval is required. And the third type of question is, at what stage does it go to the board? Okay, so the first stage is after exposure draft but before public comments, and the second stage is after ASU but before the final amendment. Is that clear, guys? Will it go through the accounting standards update? Yes. Board involvement 3 times, board approval 2 times. Yes, absolutely. And Rachita, what's your real name? I mean, real name as in, it's showing Rachita here. So I remember there were 3 changes, right? So one was Surbhi, but it was showing something else. Rachita also, it was showing something. It's showing Rachita, but your name is something else, right? Okay, I'll show the chart again. Ranjita, yeah. Okay, so the staff creates the exposure draft, then it goes to the board for voting, then it goes for public comments. Based on public comments, the staff makes changes. Then after the changes have been made, board satisfies itself that all comments have been adequately considered. Then it takes the shape of ASU, right? And then again, it goes to the board for approval, and then it is incorporated in the accounting standard codification. Okay, let's read the para one more time so that you get absolute clarity. Okay, let's read the para one more time. Proposed FASB amendments to the ASC. Okay, proposed amendments are issued for public comment in the form of exposure draft. Majority vote of the board members is required to approve an exposure draft. Okay, at the end of the exposure draft public comment period, FASB staff analyzes and studies all comment letters and position papers, and then the board redeliberates the issue. When the board is satisfied that all reasonable alternatives have been adequately considered, FASB staff prepares an accounting standard update for board consideration. Majority vote of the board is required to amend the ASC. Okay, guys. Not a very important para, but you could expect one question from this para. Like I said, how many times does it go to the board? What kind of majority, what kind of approval is required? These are the 2 favorite questions from this paragraph. Okay, and they could also ask the stage. And yes, the 4th type of question is, which one is authoritative, which one is not, right? So ASU is not authoritative, but but of course the final amendment is authoritative. Okay, let's move on. Conceptual framework for financial reporting. FASB has created a conceptual framework set forth in pronouncements called SFACs. Okay, that serves as a basis for all FASB pronouncements. SFACs are not GAAP. Okay, so let me take a pause here and let me explain this first. So we said that SFACs were issued by FASB, but they are not part of FASB accounting standard codification. Therefore, technically speaking, SFACs are not GAAP, because technically speaking, whatever comes under FASB ASC is GAAP, whatever does not come under FASB ASC is not GAAP, right? Therefore, SFACs are not GAAP. So the point is, then what are SFACs? What is their status, or what is their significance? Let's understand that. See, during the course of the syllabus, I'll give some silly examples. Okay, silly examples, because normal examples one tends to forget, but silly examples stick in our mind, right? Now, so I'll give some silly examples so that you can you remember. Now here this is not a silly example, but this is like, it's a different kind of an example I'm giving here, is that if, you know, if this is SFAC, if this is SFAC and this is gap, they are two different things we are talking about. Okay, if I say what is your name to the left guy on the screen, if I say what is your name, not guy, let me say this is a woman. Okay, so if I ask her what is your name, she says my name is SFAC. And then she says, you know what, I have a child whose name is Gap. So that means Gap has been born out of SFAC. A child is born out of a mother. So SFAC is the mother and US Gap is the child. That means what we are trying to say is that we are saying that, we are not saying that both of them are Gap, because obviously they are two different entities, right? Two different humans. One human, her name is SFAC. The other human, his name is US Gap, or her name is US Gap. Let's say we are talking about two different humans. Similarly, here we are talking about two different pieces of literature, SFAC and Gap. SFAC is the mother of Gap. I mean, this is, again, don't quote me anywhere, don't write it anywhere. Obviously, don't write that SFAC is the mother of Gap, but this is just for your understanding that SFAC is the basis, right? I mean, it is the genesis of Gap. Okay, it is the basis on which Gap has been formed. All right, think of it like this, that this is the basis on which Gap has been formed. Okay, so therefore SFACs are very, very, very important to understand Gap. Okay, now a quick summary before we get into the book. There was SFAC number 1, SFAC number 2, 3, 4, 5, 6, 7, and 8, which are part of your syllabus. Out of this, 1 has been replaced by 6. Okay, so it's not there anymore. 2 has been replaced by 6. So it's not there anymore. 3 has been replaced by 6. So it's not there anymore. Right? So that makes your job easier. You don't have to know SFAC number 1, 2, 3. Yes, 4, 5, 6, 7, 8 is what we are going to cover. And all of them are important. All of them are important from an exam point of view, extremely important. And the reason why they are important is this, because SFAC is the mother of Gap. It is the basis on which Gap has been formed. Okay, so it is the framework. Just like you have a foundation for a building on which the building stands, SFAC is the foundation on which the Gap building is standing. Right, so it is very, very important. It's the framework. Is the class recorded? Yes. You will get the link in a couple of days. It normally takes about 2 days. So by Tuesday, you should be getting it. If board is making sure that changes are being sufficiently being incorporated into the standard, why another voting is required? Can you please elaborate, Arjun? Well, if I'm getting your answer, question correctly, this is like the final piece of approval, final approval. Okay. It's the final approval. Well, till now it was fine. You have incorporated the comments. I mean, you have considered all the comments. But then once it takes the shape of ASU, you will see as to how the comments have been incorporated. I mean, one is Again, one is ensuring completeness. One is ensuring that, okay, we received 10 comments. Have you considered all the 10 comments? Okay. And then is like out of 10, if you have considered 4 comments, then how has it made a difference in the version, right? From the exposure draft version to the ASU version, how has it made a difference and what is the final impact? You just, you take it to the board for the final approval. So it's more like a formality. You are right that if they have already seen it, then why do they need? So it's more like a formality. It's like, it's more like, a, a tick in the checkbox, right? That yes, we have got the approval of the majority, approval of the board, right? Before we finally incorporate it. Yes, replaced by SFAC number 6 itself. Okay. So what I'm going to do is I'm going to go by that numbering. Okay, SFAC number 1 to 3 not required, then 4, 5, 6, 7, 8. So let's go through 4 first, then go to 5 and so on. Here in the book, they have given SFAC number 8 first. Okay. So I'm going through 4 first and then go in that order. Like here it says replaced by SFAC, SFAC 3 replaced by SFAC 6. Okay, similarly 1 and 2 also have been replaced by 6. Okay, so SFAC number 4, there's a star mark over here, so it's important. What is SFAC number 4? Objectives of financial reporting by non-business organizations. Non-business organizations meaning not-for-profit, government and not-for-profit organizations, right? Not-for-profit organizations, let's say charities, hospitals, religious institutions, any basically any not-for-profit whose primary purpose is not to earn profits, right? And we'll talk about NFPs. There's a separate chapter on NFPs. But here SFAC number 4 talks about the objectives of financial reporting. What are the objectives of financial reporting by a non-business organization? So here primarily, there are 3 topics: the characteristics of a non-business organization, right? What is a non-business organization? What are the objectives of financial reporting of a non-business organization? And who are the users of financial information of a non-business organization, right? So what are the characteristics, who are the users, and what are the objectives? So what are the characteristics? Number 1, they don't sell anything for profit, right? So their significant portion of their resources come from contributions and grants, donations, right? So their significant portion comes from contributions and grants, subsidies, donations, stuff like that. Their operating purpose are other than to provide goods or service for profit, right? So they are not existing to provide goods or services for profit. They are existing for a different cause, right? So their purpose is not to provide goods or service for profit, and they lack ownership interest. That means there are no shareholders here. There are no equity holders here, right? You have board of governors, right? So they lack ownership interest that can be sold, transferred, redeemed, etc. Okay. Non-business organizations include the most human service organizations like churches, foundations, other organizations such as not-for-profit hospitals, not-for-profit educational institutions that receive a significant portion of their resources from contributions and grants. Okay, so very easy characteristics, nothing technical in this. Who are the users? Users of financial information, the resource providers, right? The organizations that have given subsidies to them, that have given grants to them, that have given donations to them, also including lenders, their suppliers, their employees, their members, their contributors, and the taxpayers. So they are the users of their financial information. constituents who use and benefit from the services, right? So anybody who benefits from the services of that not-for-profit organization is also interested in knowing the financial statements, right? Is also interested in knowing how they are doing financially, right? So constituents who use their services and benefit from their services. Third, governing bodies and oversight bodies, right? And finally, managers who are managing that organization. Managers who are responsible for carrying out the policy mandates of the governing bodies and managing the day-to-day operations, right? So again, who are interested in knowing the financial information of a non-business organization? The resource providers, people who are benefiting from it, governing bodies, oversight bodies, and the people who are managing it. Okay. Benefiting from their service means anybody who's benefiting from their service. So for example, if a not-for-profit organization is, let's say into women empowerment, then any woman's body that is benefiting from their services. Or if it is into let's say it's an orphanage, for example, then any child that is benefiting, any community that is benefiting from that orphanage, right? So basically anybody who's benefiting from that. If it's an orphanage, it could be the kids. If it's a woman, a woman related NGO looking at emancipation of women, then any woman who's benefiting from it, right? 2.4.1, third point, they lack ownership interest. Well, they lack ownership interest. Non-business organizations, like these charities, religious institutions, these hospitals that are not for profit, they don't have any, just like in a partnership, you have two partners. In a sole proprietorship, you're a sole proprietor. In a company, you have shareholders. Here, there are no shareholders as such. Here, nobody owns the organization. There is no ownership, as such. These are mostly trusts and estates. Estates anyways, it's a different concept. Estate in the US means when a person dies and bequeaths its property into an estate. Basically all his property becomes a part of an estate until it is distributed to the legal heirs, right? So let's leave the estate concept separate, but these are mostly run as trusts, right? So there are trustees, there are no shareholders, there are trustees, right? There are beneficiaries, there are resource providers, and then there are trustees. Okay, is that clear, Asim? There are no owners or shareholders, is what it basically this point is trying to say. Exactly. They don't have any ownership interest which they can sell, right? Just like you can sell the shares of a company, here there are no shares which you can sell. Okay. That is what they mean by lack ownership interest. What are the objectives of financial reporting of a non-business organization? To provide information useful in making resource allocation decisions, right? How much resources to be allocated to what function, right? So, for example, if a particular organization is into two things or three things, right? An organization is into, let's say, women empowerment. They are also into anti-child trafficking, They are also into, let's say, environment. Okay, now they have, of course, every organization has some limited resource, right? How much resource to be allocated to women empowerment, how much to be allocated to anti-child trafficking, how much to environment. So how much resources to be allocated to, each of these, that decision can be made by looking at the financials. So the objective is to provide information which is useful in making such decisions. Second, information useful in assessing the services and the ability to provide services, right? What is the health of the financial health of this organization? The services that they are providing, will they be able to continue to provide those services for the foreseeable future, right? So one needs to be able to assess that by looking at the financials. Then third, information useful in assessing the management stewardship and performance, how efficiently and effectively the management has performed its duties, right? Assessing management stewardship and performance. Information about economic resources. Economic resources, that means assets. Obligations means liabilities. Net resources is the net position, right? Assets minus liabilities. Organization performance, how the organization has performed. That means basically we are talking about something which is equivalent to an income statement, right? How do you assess the performance of a company? By looking at its results of operations, which is basically through the income statement, right? So the performance, nature of and relationship between inflows and outflows, right? Let's say the cash inflows and cash outflows. It's like the cash flow statement. Service efforts and accomplishments and liquidity. Liquidity can again be seen from the equivalent of the balance sheet, right? And service efforts and accomplishments could be through the notes, right? So typically a financial, what are the financial statements? What do they consist of? They consist of a balance sheet, they consist of an income statement, they consist of a cash flow statement, they consist of notes to account. So similarly here, you will get to know the economic resources, obligations, net resources, and the liquidity position from the balance sheet, the equivalent of a balance sheet. You will get to know the performance and the accomplishments through the equivalent of income statement and the notes, right? You will get to know the inflows and outflows from the equivalent of a cash flow statement. Okay, we will take a break. Yes, I just realized, after I read your comment, I realized that it is 11:40 already and we have not taken a break. Yes, officially we do take a break around, at around 11:20, 11:30, and then we again resume. So we take a 10 to 15 minutes break in every class. Okay, so today, in the flow of things, I did not realize. So if you want, we can take a break now. We are done with SFAC number 4. Let me quickly summarize before we take a break. So only 3 things are important here. SFAC number 4. What are the characteristics of a non-business organization, right? How do you identify whether an organization is a non-business or a business? By looking at the ownership interest. There is no ownership interest. Their major revenues, their resources come from contributions and grants, and they are not for profit. They do not exist with the objective of earning profit. They exist for some other bigger cause, right? So therefore they do not, they are not into selling of goods and services for profit, right? So these are the main objectives. Who are the users? These 4 bullet points: resource providers, lenders, suppliers, employees, members, contributors, taxpayers, constituents who benefit from them, governing bodies, oversight bodies, and people who manage them, right? The management. And the objectives are this. Basically, if you look at the objectives, it's basically, sorry, the page is jumping. Yeah, it's basically, if you look at the objectives, it is to provide information, to provide information, to provide information, to provide information. Basically, the objective is to provide information on which will help in making, in taking decisions, right? Resource allocation decision, assessing the services and the ability to provide services, assessing the management's, stewardship and performance, and also information about the assets. Economic resources are assets, obligations are liabilities, net resources is the net position, asset minus liability. Performance is basically the income, the net income. Of course, here they are not for profit, so we will not use the word net income, right? But basically how they have performed over the period, the inflows and outflows, liquidity position. So it is basically to provide information. That is the objective. It is talking about purpose and users. Yes, of course, that is the basis. If you don't know the purpose, then how are you going to create the gap? So to create the gap, you have to know why you are creating gap and for whom, right? What is the purpose and who are the users? That is the basic information on the basis of which gap has been formed. Like we saw, gap is for non-governmental. So first of all, who are the users, right? uh, of course, it is not to say that government is not a user of the financial information of companies. Government can also be a user, right? But the point I'm trying to make here is that, you know, that is the starting point. What is the objective of financial reporting and who are the users? Then you will prepare the, you know, you will start making the financial accounting standards, etc., keeping that in mind, keeping the purpose in mind, isn't it? So in that context, you know, it says that that SFACs are the framework on the basis of which gap has been formed. Okay, and of course we'll also look at other SFACs. This is just one. We'll also look at SFAC 5, 6, 7, 8, where you will see that there are, you know, this accounting related terms coming up. Okay, so guys, let's take a quick break. It's 11:46 right now. Let's resume at 11:56. Okay, basically exactly 10 minutes from now. Right, guys, is everyone back? Okay, so let's get started. We were done with SFAC 4. Let's go to SFAC 5 now. Recognition and measurement in the financial statements. Recognition and measurement. So we are talking about two things here. Recognition criteria, right? And the measurement. Okay, so there's no, I mean, there's no specific heading over here, but yeah, there's, I mean, it is part of a heading, measurement attributes. Okay, so recognition and measurement. But before that, SFAC 5 says, what does a full set of financial statement consist of, right? It consists of the statement of financial position, the balance sheet, statement of financial position, which is the balance sheet, statement of earnings, which is the income statement, statement of comprehensive income, statement of cash flows, statement of changes in owner's equity. So there are 5 statements, right? And these are all statements. So if you notice here, these are all statements, statement of, statement of, statement of, statement of, and statement of. That is why they are called financial statements, right? These are statements, and full set consists of these 5 plus the notes. Notes are always an integral part of the financial statements. Whether we mention it, you know, whether it is mentioned over here or not, notes are always an integral part of the financial statements. Okay, so so income statement and comprehensive income can be presented as one statement. Okay, so there is a possibility that there are only 4 statements, you know, in a full set of financial statements of a company, because income statement and comprehensive income have been presented in one statement. That's possible, but yes, uh, as per SFAC 5, these are the 5, right? Now you can get a question from here, and let me ask you one question, very simple question. There is statement of financial position, statement of earnings or statement of income, statement of cash flows, and statement of owner's equity. And so these are the 4 answer choices. And my question is, which one of these is not a financial statement in the full set of financial statements? Which one of these is not part of the full set of financial statement? Okay. Okay, great. All of you have identified, yes, D is the right answer because it is not statement of owner's equity, but the correct name is statement of changes in owner's equity. Right? This is the correct statement. This is not the correct statement. Therefore, D is the right answer. Right? So they can ask you simple questions like this. What is PUFE? We will do that when we go to comprehensive income. Basically, it's a mnemonic for what items are covered under comprehensive income, right? So we'll talk about that when we go to this topic. But just for your quick reference, P is pension adjustments, U is unrealized gain or loss on available for sale debt securities. It's a very, very specific thing. Available for sale debt securities, only on debt securities, not equity securities, only on available for sale, not for trading securities or held to maturity securities, right? So it's a very specific thing that comes under comprehensive income, right? I mean, other comprehensive income. Then F stands for foreign currency, basically foreign translation, foreign currency adjustments. But what kind of foreign currency, we'll see that, right? So there is a separate topic on that as well. Is it foreign currency transaction gain loss, or is it foreign currency translation gain loss? Even in foreign currency translation, there are two methods: the remeasurement method and the translation method, right? So which gain loss comes under OCI? And then E is the effective portion of a cash flow hedge, right? So we'll cover all this in detail. This is just an introductory chapter, right? We'll get into details later. So this is the full set of financial statements. Yes, Arjun, we'll cover this PUFE separately. Now, recognition criteria. What is recognition? When we say something has been recognized in the books, what do we really mean? Recognition is the process of formally recording or incorporating an item in the financials of an entity and classifying it, not only formally recording it, also classifying it as an asset or a liability or an equity or a revenue or an expense, right? So something very basic. You already know what recognition is. Basically, when you pass a journal entry, right? That's why it's JE is written next to it. When you pass a journal entry, you are actually incorporating something into the books, right? You are passing the entry. From the entry, it will go to the ledger. From the ledger, you will prepare the trial. From the trial balance, you will prepare the financial statements. It will enter into the balance sheet or the income statement or the cash flow statement, one of the financial statements it will enter. And you will also classify that item as an asset or an expense or a liability or an equity or a revenue, whatever. So that is called recognition. The item definition, the item meets the definition of an element of financial statement. So SFAC number 6 talks about elements of financial statements. That means whatever we are recognizing in the books, that must ultimately be part of one of the elements of financial statements. It must either be an asset or a liability or an equity item or a revenue item or an expense item, right? So it must meet one of the definitions of one of the elements of the financial statements. Okay. Measurability, item has a relevant attribute, measurable with sufficient reliability, right? That means we should be able to measure it with sufficient reliability. Something that cannot be measured will not be entered, right? Only something that can be measured with sufficient reliability will be recognized in the financials. Okay. So measurable with sufficient reliability meets the definition of an element. Number 3, relevance. Information about it is capable of making a difference to a financial statement user. Right? That means the information is relevant. If it can make a difference in your decision regarding those financials, right? Then it is relevant information. Otherwise, it is irrelevant information. So all the relevant information will be recognized. No relevant information will be skipped or omitted, right? And 4th, reliability. Information is represented faithfully, it is verifiable, and it is neutral, right? Now, again, Faithful, that means it really represents the transaction, right? It is faithful. That it should not happen that the company has actually suffered a loss, but the financials are showing a profit, right? That means it is not faithfully representing the reality of the situation. So faithful means it must truly show what has actually happened, right? Verifiable, of course, verifiable means that it must be capable of being verified. And that means, every transaction must have a voucher. Every voucher must have a supporting document. That means, it is capable of being verified. And it must be neutral. Neutral means there should not be any bias in the preparation of financial statements. That means if I prepare the financials, it will come out a certain way, and you prepare the financials, it will come out in a different way. That should not happen, right? Whether I prepare it or you prepare it or any XYZ prepares it, it should be the same. It should be neutral. I should not bring in my subjectivity or my bias into it, right? So that is what it is. That basically financial statements must be reliable, they must be relevant, and the item that you are recognizing must meet the definition of an element. An element means either an asset or a liability or an equity or a revenue or an expense. So basically what they're referring to as element is basically these items, right? And it must be measurable with sufficient reliability, right? Useful information. Yes, Ashish, it means useful information. It means useful information, and it also means material, anything that is material to. And what is material? Basically anything that can influence the decisions of the users is material, right? So yes, you can say it is material information, it is useful information, and therefore it is relevant information. So materiality is part of relevance. Okay. Measurement. Items reported in the financials are currently measured using different attributes, right? So we know that we can use different attributes for different items in the financials. We don't use the same attribute for entire balance sheet. For example, for property, plant and equipment, we use historical cost. For inventory, we use current cost. Well, for inventory, we'll talk about it later. There's a detailed discussion. It could be lower of cost or market. It could be lower of cost or NRV, depending on the situation. And what is market is there is a proper definition to what is meant by market. It is the middle value. You don't need to write all this right now because we'll do it in detail later. There's a separate topic on inventories. Middle value of three things, right? So there's a detailed discussion. So it is basically on the current cost because we are looking at the market or the net realizable value, right? So therefore they are saying current cost, although current cost does not literally mean current cost because there's a concept of replacement cost, which is a different concept. We'll talk about all that when we come to inventories. NRV itself is used for accounts receivable, right? Net realizable value. Price ceiling price for replacement cost. Yes, exactly. Exactly. Right. So like I said, Arjun, don't bother about it right now. There's a detailed discussion, detailed topic on all these items, actually separate modules on these items when we discuss. Okay. Market security. For market securities, we use current market value, right? For trading securities and available for sale securities, we use current market value. And then we use for bonds and for notes, we use the present value, PV, present value of future cash flows, right? So basically the point of this paragraph is, don't bother about, what is the treatment for property, plant and equipment, what is the treatment for inventory. There are separate modules on those. Don't bother about that right now. The point of this paragraph is to highlight the fact that different measurement bases are used for different items in the financial statements. That's the only thing, that US GAAP recognizes that different items require different measurement bases, for recognition. So when you pass an entry, it could be a different measurement basis that you have done for property, plant and equipment item. It could be a different measurement basis for an inventory item, right? So US GAAP recognizes that. That's the only point of discussion over here. Okay. So Arjun, since you have asked the question, let me quickly answer. I mean, although, like I said, we will discuss it later. Price ceiling is basically the NRV. Price floor is NRV minus normal profit margin. Normal profit margin, right? And then we have the replacement cost, right? So like I said, we'll discuss all this later. And market is the middle value of these three. So NRV, the concept of NRV is part of the market concept in any case. Okay, fundamental assumptions under US GAAP and principles, right? So what are the fundamental assumptions? If you see here, the entity assumption, the going concern assumption, the monetary unit assumption, and the periodicity assumption. So there are 4 assumptions we are talking about. And these are very basic things you have learned in 11th, right? Class 11th commerce, accounts, that what is an entity concept, right? What is an entity concept? Economic activity can be accounted for when considering an identifiable set of activities like a separate corporation or a division, right? That has an identity of its own. It's a separate entity, right? Separate legal entity, or it could be a division of a company which is not a separate legal entity, but that has its own revenues and expenses and cash flows, and discrete information can be taken out of it, right? Separately identifiable information can be identified as to what are its revenues, what are its expenses, what are its cash flows, etc. And financial statements can be prepared for it separately, right? Like a parent and a subsidiary, 2 separate set of financials can be prepared. 2 different companies, separate set of financials can be prepared. They are separate entities, right? So entity assumption. Going concern assumption, that entity will continue to operate in the foreseeable future, right? So that's an assumption. Third, monetary unit, that money is an appropriate basis by which to measure economic activity. Assumption is that monetary unit does not change over time. Thus, effect of inflation are not reflected in the financials. Effects of inflation are not reflected in the financials, right? So if you had purchased a piece of land in 1980s for $100,000, it will still appear in your balance sheet at $100,000, right? We will not take the effect of inflation in the financial statements, right? So that's a monetary unit assumption. Money does not change over time. The monetary unit does not change over time. Periodicities, of course, that an economic activity can be divided into meaningful time periods like quarter, year, half year, month, right? Okay, so these are the 4 assumptions. Then we have the principles, the measurement principle, and like I said, US GAAP allows, as in not, let me correct myself, not US GAAP. We are talking about SFAC, which is technically not US GAAP. So SFAC allows assets and liabilities to be measured at various bases, right? And we just saw that historical cost for something, fair value for something else, NRV for something else, PV for something else. As a general rule, however, financial information is accounted for and based on cost, not on current market value. That's the general rule, but there are exceptions to that rule, right? So as a general rule, information is accounted for and based on cost, right? But we have seen, and we'll see later, that there are exceptions to this rule. Okay, so that's the measurement principle. The basic idea is that SFAC allows different measurement bases for different items. Accrual accounting, revenues are recognized when performance obligation is satisfied, right? When the performance obligation is satisfied, then you will recognize revenue, not when you receive the cash, right? And expenses are recognized in the same period as the related revenue, right? Which is also the matching principle, right? Expenses are recognized in the same period as the related revenue, not necessarily in the period in which the cash is received or paid. Okay, so revenue recognition. Revenues are recognized when an entity satisfies a performance obligation by transferring either a good or a service to a customer. And you have seen that there are two modules on revenue recognition where we'll discuss revenue recognition in detail. Okay, when you satisfy a performance obligation, that is when you recognize revenue, right? Not when you receive the cash. Expense recognition, expenses are necessarily incurred to generate revenue. Therefore, expenses incurred to generate specific amount of revenue in a period are matched against the revenue, right? So which is called the matching principle, right? So expenses are matched with the revenue. Expenses that do not have a direct link with revenue may be recognized when cash is spent or liabilities are incurred. Other expenses are allocated by systematic and rational procedure to the period in which the assets provide the benefit. That means we are saying that expenses are divided into two categories. Number one, expenses that have been incurred to generate a revenue. Those expenses will be recognized in the period in which that related revenue is being recognized. Second category of expenses that are not linked to revenue generation, right? Like selling general and administrative expenses. They are called period cost. So they are recognized in the period in which they have been incurred, right? When the liability has been established or when the cash has been spent, right? So basically in the period in which they have been incurred, they will be recognized. But for category one expenses, they will be recognized only when the related revenue is recognized. Is that clear, guys? Any questions on that? Please feel free to ask. No questions? Very basic. Okay, full disclosure principle. Important that users be given information that would make a difference in the decision process, but not so much that the user is impeded in analyzing what is important. So give relevant information, give all the material information, right, which is important for them to take decisions or which can influence their decision, but don't give so much information, don't overload them with information that, you know, the important information gets lost in the sea of information, right? So give what is relevant, but give that fully. Okay. So SFAC number 5 is done. In the SFAC 5, what we did was full disclosure. What is the full set of financial statements? Number one. Then second, the measurement criteria, right? What is recognition, and then what are the requirements for recognizing an item, and then the measurement criteria, right? That different measurement bases can be used for different items. Then we did the assumptions and the principles. 4 assumptions, 3 principles. Expense recognition, last line. Other expenses are allocated by systematic and rational procedure to the period in which the asset provide benefit. For example, depreciation, right? So you will provide depreciation in the period in which the related asset has given benefit to the organization. If the asset has given benefit to the organization in 2021, then you will recognize part of that as depreciation expense in 2021. If it is going to give you benefit for next 5 years, you're going to recognize the cost of that asset by way of depreciation over the next 5 years, right? Losses may result when it is evident that future economic benefits of an asset have been reduced or eliminated. That means when the asset has been impaired, right? So again, impairment is a separate topic. We'll talk about impairment in that, right? So when the benefit of the asset has been reduced or completely eliminated, then we will record an impairment loss. That's why it says losses may result when it is evident that future economic benefit of an asset has been eliminated or reduced. Is that clear? Okay. Okay, so we are done with SFAC 5, right? Full set of financials, 5 statements plus notes. Then the recognition criteria, what is recognition and the criteria, and then measurement basis, and then 4 assumptions and 3 principles. SFAC number 6 is just the elements of financial statements, and I don't want to go through this. I don't want to, let me put it this way. I don't want to insult your intelligence by explaining to you what is an asset, right? Because that is the class 11th level information, right? So what is an asset? What is a liability? You all know it very well. I don't want to insult your intelligence. Okay, you can go through this on your own. If somebody has a doubt as to what is an asset or what is a liability, you can feel free to reach out to me. But if you have a doubt in this area, then it's a matter of concern. Okay, what is an asset? Let me just highlight the important few words here. It's a probable future economic benefit. Liability is a probable future sacrifice, economic sacrifice, right? So the word probable here is important. And what is probable? Probable means, it means more than 50% likelihood. That is called probable. Probable is higher chance than possible. Possible is less than 50%. Then we say possible. Okay, but when we say probable, we mean that there is a more than 50% likelihood of something happening. So if there is a more than 50% likelihood that we are going to benefit from this particular item, we are calling it an asset. If there is a more than 50% likelihood that we have to sacrifice, there is an economic sacrifice that we have to make, then that's a liability, right? And that is why when we do contingent liabilities, you will see that when it is probable and can be reasonably estimated, we book a liability. We pass an entry, we pass a journal entry and book a liability, right? Even though it is contingent, but because we say that if it is probable that it is going to happen, right? Probable, that means more than 50% chance, and we can estimate the amount, we will pass a journal entry and recognize the liability in the books. Okay. If in the, yes, more than 50% is probable, less than 50% is possible. Correct. What is equity? What are investment by owners? What is distribution to owners? Yes, comprehensive income is something that I'm going to discuss with you, because that is something you may not have done in your school and college life. And there is a separate module on comprehensive income as well. Okay. Then what is revenue? What are expenses? What are gains? What are losses? That's all SFAC number 6 talks about. The elements of the financial statements. Okay. So SFAC talks about what are financial statements, the full set. SFAC 6 goes one level down and says what are the things inside those financial statements? What are the elements inside those financial statements? Okay. The only thing that I want to highlight, Ashish, just give me a moment. I'll talk about comprehensive income. The only thing that I want to highlight here is that SFAC number 6 recognizes the fact that revenues are different from gains. Revenues are operating and gains are non-operating. Similarly, expenses are different from losses. Expenses are operating, losses are non-operating, right? So this particular recognition that an item, just because, the nature is similar, does not mean it's the same thing. They are different. So a revenue is an operating item, right, which is coming from the core operations of the business, whereas gain is something that is incidental to the business. It is not your core operation. So for example, let's say if you are a shoe manufacturing company, right, then manufacturing and selling shoes is your core operation. So whatever earning you are getting, whatever sales you are generating from the shoes, that's your revenue. But if you sell a piece of furniture, then it is a gain on sale of furniture, which is a non-operating item, because your business is not selling furniture. Your business is selling shoes, right? But for a furniture manufacturing company, manufacturing and selling furniture is the core operation. So for them, selling furniture would be revenue, not gain. But for a shoe manufacturing company, selling furniture would be gain on sale of furniture, not revenue. So SFAC number 6 clearly distinguishes between these two terms, revenue and gain, and similarly between the two terms, expenses and losses. Okay, is that clear? Loss on selling of goods is operating. Okay, so if a shoe manufacturing company is selling shoes at a loss, that's operating. Is that clear? Okay, now let's talk about comprehensive income. So you're saying selling, not on selling, but loss on material while processing. Yes, yes. I mean, that's a costing concept though. It's not a financial accounting reporting concept. It's a costing concept, normal and abnormal losses, right? Normal losses are baked into the cost of the product. Abnormal losses hit the income statement. If that is what your question is, Arjun. Normal losses are baked into the product cost. Abnormal losses go to the income statement, right? Okay, so now let me talk about comprehensive income. Now you have income statement. From the income statement, you get the net income, right? Right? In the US, they don't call it net profit, they call it net income. Okay, so from the income statement, you get the net income. Now, if you add something else to it, other income, you will get the comprehensive income, right? The English meaning of the word comprehensive, I mean, it covers everything. So it not only covers net income, but it also covers some other income. Okay, some other incomes. And together they are called comprehensive income. Now this other income is called other comprehensive income, OCI. So net income plus OCI is comprehensive income. Okay. Now in OCI, there are about 4-5 items that that are part of OCI, right? And that was the mnemonic PUFIE, PUFIE. Okay, and of course they stand for certain things. So P stands for pension adjustments. Right, so this is unrealized gain loss on available for sale securities, available for sale debt securities. Then this is foreign currency translation adjustments. Then I is instrument specific credit risk. Then this is the effective portion of a cash flow hedge. So these items do not go to the income statement. They are not part of the income statement. They are outside the income statement. They are part of OCI. But yes, comprehensive income covers both. Now, comprehensive income, let's say our net income is 1200 and OCI is 200, right? The comprehensive income is 1400. But in the balance sheet, you will not be able to see this 1400, at one place, because the two items go to two separate places in the balance sheet. In the balance sheet, the net income will go and get added to retained earnings. OCI will go and get added to AOCI, accumulated OCI. They are both part of the equity section of the balance sheet. Okay, the equity section of the balance sheet has both retained earnings as well as AOCI. So at the end of the day, they both go to the equity section of the balance sheet. right? But they go separately. 1200 will go and get added to retained earnings. 200 will go and get added to accumulated OCI. Okay. Instrument specific credit now being excluded from OCI. No, I mean, we will go to the comprehensive income module. See, right now I'm just giving you an introduction as to what is comprehensive income, right? Remember, the first two chapters are pretty much introducing you to the subject. Then we will start getting into the details. So I know there will be a lot of questions in your mind right now, but they will get answered as we go to those topics. Okay, guys? Okay, so this is SFAC number 6. Then let's go to SFAC number 7. Using cash flow information and PV in accounting measurements, present value. Now, SFAC number 7 provides a framework for accountants to employ. Okay, a framework to employ. When do you have to employ this framework? When using future cash flows as a measurement basis for assets and liabilities. Okay. Peripheral, Ashish, peripheral means incidental to the business. They are not core to your business. Like I said, loss on sale of furniture is not your core operation if you are a shoe manufacturing company, right? It is peripheral to your business. It is incidental to your business. It's a side activity. Once in a while you sell furniture. You are not in the business of selling furniture, right? Okay, so when you are using future cash flows to determine the measurement basis for your assets and liabilities, right? You have to calculate the present value of those future cash flows, right? That is the time you will use this framework, which is mentioned in SFAC number 7. Okay. Now, what does SFAC 7 say? It says SFAC 7 applies only to measurement issues for assets and liabilities, right? Not to all the elements of the financial statements, not to revenues, not to gains, not to expenses, not to losses, not to transaction, you know, uh, uh, basically not to any other element of financial statements, only to assets and liabilities. That also those assets and liabilities that are determined using future cash flows only. So it has a very limited applicability, right? It is applicable only to assets and liabilities, and that also only to those assets and liabilities that are determined using future cash flows. Okay. Now, what are the 5 elements of PV measurement? Let me ask you first. Do you guys know what is present value or how it is calculated? I mean, of course, chartered accountants in the group would know. So how is PV calculated? Nobody is going for it. Okay. Okay. Yeah. So what is the information that you need to find the present value of something? You need to know the amount. First of all, you need to know the amount, right? Whose present value you need to find out, right? So you need to know the amount. Second, need to know the time. Third, you need to know the PV factor. To know the PV factor, you need to know the discounting rate. Am I right? And finally, when you multiply the amount, column 1, when you multiply column 1 with column 3, you get the present value. Am I right? So that means you basically need 3 key pieces of information to find the present value. You need to know the amount, you need to know the time, and you need to know the PV factor. If I further break it down, I will say you need amount, you need the time, you need to know the discount rate. Now, to know the discount rate, you need to know the risk-free rate, and you need to know the risk premium. Correct? That means if the risk-free rate, I'm just taking a hypothetical example, if the risk-free rate is 7% and risk premium is 3%, that means we will say that we are using the discount rate of 10%. Now, once we know the discount rate, we can easily calculate the PV factors by, for year one, let me make it on a separate sheet. The amount, the time, the PV factor will give you the PV. So if the time is 0, the PV factor is 1, right? If the time is 1, the PV factor would be 1 by, and if the discount rate is 10%, then it will be 1.1. If the time is 2, it will be 1 by 1.1 square. If the time is 3, it will be 1 by 1.1 to the power 3. Correct? So coming back to the discussion, what do you need for present value calculations? Amount, time, risk-free rate, risk premium, any other information, other factors / other information, like Ashish, you are saying beta also, right? So any other information, right? So basically you need 5 things: amount, time, risk-free rate, risk premium, and other factors. Correct? Now let's go back to the SFAC. SFAC is also saying the same thing. SFAC is saying 5 elements. FASB identified 5 elements of present value measurement. What is it? The estimate of the future cash flow. That means basically the amount. The expectation about the timing. So the time. The risk-free rate. Time value of money, the risk-free rate. Price for bearing uncertainty. That means the risk premium. And any other factors. Right? So the first two, the amount and time, if I leave these two, then the remaining 3 basically impact your discount rate. The risk-free rate plus the premium for the uncertainty, the credit risk, and other factors like liquidity risk or market imperfections. These 3 will impact your discount rate. Is that clear? Yes? Okay. Now, therefore, what is SFAC number 7 saying? It is saying that there are 2 approaches to PV calculations. The traditional approach and the expected cash flow approach. Now here, let me just quickly read it and then I will discuss. Traditional approach, one discount rate used to take the PV of future cash flow stream. So the most important thing here is one discount rate used. When there are contractual cash flows, contractual fixed cash flows that are not expected to vary. Okay, so that means when you have fixed cash flows, you know that you are going to, let's say if it's you're going to receive 100,000 next year, 100,000 at the end of the following year, 100,000 at the end of the following year, you know, like this, year 2, year 3, year 4, year 5, year 6, 100,000 till year 10. So it's a contractual amount. You know that you're going to, you know, it's a fixed amount that is not going to vary. If it's not going to vary, then you will use the traditional approach. In this approach, interest rate selection is paramount. Okay, so three important things from this paragraph. One, discount rate used. Interest rate selection is paramount. And this approach is used when there are contractual fixed cash flows. Okay, now what does that mean? We just said that we need the amount, we need the time, and we need the discount rate to calculate the PV factor. Then we will get the PV. So if the amount is fixed, it is contractual, we know it, we know the time. Therefore, what is of paramount importance is to select the correct interest rate, right? Interest rate here means basically they are referring to the discount rate. So the interest rate selection is paramount. And remember, if you select the wrong interest rate, it will give you the wrong result, right? If instead of 10% you select 12%, then answer will be different because obviously the PV factor will be different, correct? So this is the question mark. In traditional approach, selecting this is, in fact, the discount rate. Selecting this is of paramount importance. What about the expected cash flow approach? The other approach. In that approach is used when the cash flows are not contractual, they are not fixed, and they can vary, right? So now you don't even, I mean, there is no certainty about this. So what SFAC is saying that, you know, if this is also uncertain and if this also is uncertain, then, you know, you are dealing with two variables, right? So what we will do is we'll make your life easier. If your cash flows are not contractual and they are varying every year, then let's do this. Time, of course, you know, this, take the risk-free rate. Don't bother about the rate, take the risk-free rate, which is basically in the US, the rate of the treasury bill, the T-bill rate. Okay, the treasury bill is also referred to as the T-bill. So take the T-bill rate, that's treated as the risk-free rate. At least your one variable is covered. Okay, so focus all your energies in determining what is this amount. So this is the expected cash flow approach. In the traditional, they are saying amount is known, so you focus your energies in determining the right interest rate. Okay, traditional approach. So here interest rate selection is paramount. Here determining the amount is paramount. Amount selection or amount, you know, determining the amount. Amount determination is of paramount importance. Okay. Now, therefore, in one approach, we are saying interest rate selection is paramount. So you start off with the risk-free rate, but then you add the risk premiums. And risk premiums could be because of credit risk, it could be because of default risk, it could be because of liquidity risk, it could be because of other factors, other market imperfections. Right, so they are saying amount is known, you focus your energies on determining this. And by the way, as far as you are concerned as a student, you don't have to bother about all this because discount rate will be given in the question. So don't have to bother about it. It's just that understand what SFAC is saying. So SFAC is saying that for the traditional approach, calculating this amount is of paramount importance. Okay, so start with the risk-free rate, the T-bill rate, but then add this carefully. In the other one, they are saying that expected cash flow approach, they are saying that fine, Rate, no problem, just take the risk-free rate. So 7% for the T-bill. But now amount is important. So if you don't know the amount, then use some probability weights. Okay, what is the probability that it will be 100,000? Let's say 0.2. What is the probability it will be 120,000? Let's say 0.3. What is the probability that it will be 130,000? 0.1. What is the probability that it will be 90,000? 0.3, like that. So 3 and 3, 6, 8, 9. Let's say what is the probability that it will be 140,000? 0.1, right? Total has to be 1. And now calculate the weighted average, right? So calculate the weighted average, multiply this, and then add up these 5 amounts, right? You get the weighted average. And just like you do some adjustments over here, just like, risk-free rate, you add the risk premiums, and then you can do your final adjustment. You can also do your final adjustment to, plus or minus something. Right? So let's say this is 111, 10%. And then you can do your final adjustment of whatever, plus 1, minus 1, whatever adjustment you need to do, let's say 1%. Therefore, it is 11%. Similarly, they are saying here, after calculating the weighted average also, you can do a final adjustment, plus or minus, and then come out with the amount. And then use that amount in the calculation. Okay. Okay, so let's go to the paragraph and see one more time. Traditional approach, one discount rate is used. It is used when there are contractual fixed cash flows that are not expected to vary. Interest rate selection is paramount. Expected cash flow approach, in more complex cases, expected cash flow approach is to be used rather than focusing on the interest rate selection. This approach uses only the risk-free rate. As the discount rate, and then turns its attention to the expected future cash flows, considering uncertainties as adjustments to the future cash flows. So the expected cash flow approach considers a range of possible cash flows and assigns probability to each cash flow in the range to determine the weighted average. Adjustments to the expected cash flow used in complex present value computations are required for uncertainties. So finally, even after calculating the weighted average, you will do some plus or minus for uncertainties, risk and uncertainty adjustment. Okay. Finally, FASB determined that when using PV, objective of estimating fair value of a liability must consider certain other factors. So when you are calculating the fair value of a liability, you must also consider the cost to settle that liability, okay, and the credit standing of the company. To use this approach, simply adjust the carrying amount of the asset or liability to the present value determined using the revised estimates, and discount using the original effective interest rate. So every time you have to do an adjustment, use the revised estimate, but use the original effective interest rate. Right? So again, how do you calculate PV? We will do that in quite a detail when we go to the bonds chapter. Okay, because in bonds, that is one area where we show it at present value. Okay, so if you don't know how to calculate PV, don't worry, we will cover that in detail later. Okay, any questions on SFAC 7? Okay, what are the things that you need to calculate PV? 5 things. What are the approaches? 2 approaches, traditional and expected cash flow approach. What is important in the traditional approach? The interest rate selection. What is important in the expected cash flow approach? Determining the amount. And to determine the amount, you take a range of possible amounts, you assign probabilities, compute the weighted average, and then do some risk and uncertainty adjustments. Is that clear, guys? Any questions from SFAC 7 before I move to SFAC 8? Everything clear? Can the risk premium be added to the expected cash flow approach? No, not for the rate. Asim, not for the rate. For the rate, you will take the risk-free rate. You can do the adjustment in the amount. Okay, show the table again. So this table you are referring to? So Mayur, any like all the other adjustments are covered in the other category. See, the idea here in SFAC 7 is not to get into the computational part. Here, SFAC 7 is only saying that which approach to use and when. Okay, the computational part will come later when we start doing the questions where PV is calculated. Okay, and of course, you in BC there is a very detailed discussion on beta, right? Beta discussion is not a part of FAR. Beta discussion is a part of BC. Okay, so don't worry about that. We will do the calculations when we come to the the practical chapters. Okay. Okay, so basically, if you have done BEC, you know what I'm referring to, the CAPM model, the the cost of capital, that particular topic where you talk about beta in detail. Okay, guys. So SFAC number 8. So here it is, SFAC number 8. Now let me quickly summarize SFAC 8 for you. So SFAC number 8 has 2 chapters. Okay, chapter 1 and chapter 3. Chapter 1 is on objectives of general purpose financial reporting. And chapter 3 is on the qualitative characteristics of financial reporting, of financial information. Qualitative characteristics. And in qualitative characteristics, further, there are 2 things. Fundamental qualitative characteristics and enhancing qualitative characteristics. Right? And in fundamental, there are 3. Sorry, in fundamental, there are 2: relevance and reliability. And reliability is also called faithful representation. Relevance and reliability, or relevance and faithful representation. And in enhancing, there are 4. 2, 3, 4. Okay. Comparability, timeliness, understandability, verifiability. Comparability, timeliness, understandability, and verifiability. In relevance, there are 3: predictive value, confirmatory value, and materiality. In faithful representation, there are 3: completeness, neutrality, freedom from error, free from error. Okay, this is predictive value, confirmatory value, materiality, completeness, neutrality, neutral, and free from error. This is the overall crux of SFAC number 8. Let me quickly take you through the book. I'll come back to this page, don't worry. If you see here, relevance, predictive value, confirmatory value, materiality, and these are fundamental qualitative characteristics, right? Relevance and faithful representation are the 2 fundamental qualitative characteristics of financial information. Within relevance, you have predictive value, confirmatory value, materiality. Within faithful representation, you have completeness, complete, neutral, and free from error. And in enhancing, sorry. In enhancing qualitative characteristics, you have comparability, verifiability, timeliness, and understandability. You have to remember this. This is something you have to remember by heart because it comes in the exam. Okay, which one is part of what? Okay, so please revise this really well. Qualitative, fundamental, and enhancing. Within fundamental, relevance and faithful representation. And in enhancing, there is comparability, timeliness, understandability, verifiability. And in relevance, there are 3. In reliability or faithful representation, there are 3. What about objectives of general purpose financial reporting? Now, first of all, the word is general purpose financial reporting, right? For example, US GAAP is a general purpose financial reporting framework. It's a general purpose financial reporting framework. IFRS is a general purpose financial reporting framework, right? So these are examples of general purpose financial reporting framework. There are some special frameworks which are called other comprehensive basis of accounting, OCBOA, other comprehensive basis of accounting, right? Like tax basis of accounting, regulatory basis of accounting, cash basis of accounting, hybrid, there are different types, contractual basis of accounting. So first of all, SFAC number 8 talks about general purpose financial reporting. That means US GAAP, not OCBOA. Okay. First of all. Second, it says that the objective of general purpose financial reporting is to provide information to the primary users to provide information to the primary users so that they can make decisions, right? Any information that can influence their decision is a relevant information, is a material information, is a significant piece of information. Now, who are primary users? SFAC number 8 clearly specifies only 4 categories. Investors, potential investors, creditors, and lenders. There are only 4 categories of users who are considered to be primary users. Everybody else is a secondary user, right? So in the exam, they will try to confuse you by saying that regulators, income tax authorities are primary users. Answer is no, they are not. Even SEC is not a primary user. Even SEC is a secondary user of the financial information. Right? Only the investors who have actually invested money in the company, creditors who have actually given credit, lenders who have actually lent money, or potential investors who are thinking of investing money, basically whose money is involved, they are primary users. Everybody else whose money is not involved, they are secondary users. Income tax authorities, Securities and Exchange Commission, government, anybody else whose money is not involved, they are not primary users. Okay, so basically these are the 4 categories of primary users. Objective is to provide them with information about the company, about its resources, about its assets, liabilities, all that, so that they can take informed decision of whether to invest, whether to give loan, whether to give credit to the company, or if they are already creditors and lenders and investors, should they pull out of the company, stuff like that. So first is objective. Second is qualitative character. What kind of qualitative characteristics should the financial information have? It should have a predictive value. So let me quickly, talk about these 3 and 3, 6 and 4, 10 things. Predictive means by looking at the financial statements, financial information, you must be able to predict, reasonably predict as to its future, how the company is going to perform in the next cycle. Okay, it must have a predictive value. Confirmatory means whatever you had predicted in the previous one, you should, by looking at this year's financials, it should give you a confirmatory value that yes, this is what we thought the company will achieve. The company has achieved this much. Okay, so predictive value is forward looking, confirmatory value is backward looking. You are confirming your previous understanding. Materiality is any information that can influence the decisions of the users is material. Right, so all the material information should be presented. No material information should be omitted or misstated. Right. Next is completeness. That means, of course, all material information must be presented. Nothing should be skipped or misstated. That's completeness. Neutral. Neutral means against that it should be free from bias. Neutral means free from bias. Right. So if I prepare financials versus you prepare financials, or any XYZ prepares financials, it should be the same. There should not be an element of subjectivity. That is neutral. Free from error, important point to understand. Free from error does not mean absolute accuracy in the financials. Does not mean. Okay, free from error, because financial statements can never be 100% accurate, because there are estimates involved in the preparation of financial statements. You estimate the life of fixed assets. You estimate your, your provision for doubtful debts, right? So there can never be 100% accuracy in the preparation of financial statements. So therefore, free from error does not mean 100% accuracy, but free from error means the, the selection and application of accounting principles. There should not be any error in that. You should select and apply the right set of accounting principles for your entity. That is what free from error means. Okay. So there is a question here. Can you explain materiality? See, materiality means any information. Okay, it's a very open-ended definition. Any information that can influence the decisions of the primary users is a material information. So you cannot omit any material information or misstate any material information is what it says. Okay, I'll take you through the book as well. So here is the screen. Chapter 1, Chapter 3, Objectives of General Purpose Financial Reporting. Chapter 3 is qualitative. In qualitative, you have fundamental and enhancing. In fundamental, you have relevance and faithful representation. In that relevance, you have predictive, confirmatory, and materiality. PCM, reliability or faithful representation, one and the same thing. You have completeness or complete, neutral, and free from error. And then enhancing, you have comparability, timeliness, understandability, verifiability. This is all in the book, so don't worry about it. It's all there in the book. I've highlighted in the book as well, right? Primary users are investors, potential investors, creditors, and lenders, right? Okay, are you done? Now, since you had asked a question on materiality, let me quickly take you to that point where it explains materiality. Information is material if an omission or misstatement could affect the decision made by users. That means any information that could affect their decision should not be omitted or should not be misstated, right? Any information whose omission can affect their decision is a material information, or whose misstatement can affect their decision is a material information. Okay, and it is an entity specific aspect. FASB does not specify, FASB has not specified a uniform quantitative threshold for materiality. That means materiality could be different for different companies. Okay, FASB has not specified any threshold for materiality, has not specified what could be material in specific situations, right? So it is up to the management of the entity to decide what is material and not. As far as auditors are concerned, when they audit, they will determine their materiality, right, for audit purposes. But for financial preparation and presentation of financial statements, the management of the entity will decide what is material and what is not, what could influence the decision of the shareholders, of the primary users, and what may not influence the decision. So it is definitely a very subjective concept. Okay, guys, so with that, we are done with module 1. Right, so we have completed module 1 today. Just 1 second, let me. Yes. Right, so we have completed module 1, and today being the first class, of course, the first hour was introduction, and then I also went a little slow today because it was the first class. You know, you all need to settle down into the course. So from tomorrow, of course, I'll take your feedback. You know, if the pace is fine, or do you want me to go faster or slower? I'll take your feedback. But you know, in general, you know, I went a bit slow today because today was the first class. So from tomorrow, I might increase the pace a little bit. But again, if only if you guys are comfortable with that pace. Otherwise, we'll continue with this pace. Okay. SFAC 8 again tomorrow in class. Okay, I'll quickly take you through SFAC 8 again. In fact, from the book also, I'll highlight some of the important areas. Okay, guys, so any questions before we wrap up? No questions? Okay, so like I said in the morning, please revise whatever we have covered today. We have covered very little, just one module, right? But please revise that. Okay, when was SEC formed? When was CAP formed? When was APB formed? When was FASB formed? When was FASB ASC? You know, FASB ASC came into, so like became effective. And then what are the pronouncements these bodies came out with? Then what is the ongoing standard setting process? The exposure draft to the ASU to the final, you know, accounting standard codification, you know, amendment, right? Then majority vote of the board, how many times, you know, all of that. And then SFACs 4, 5, 6, 7, 8. Non-business organizations 4, 5 was, full set of financials, and then measurement criteria and all of that. 6 was elements. 7 was PV computation, traditional approach, expected cash flow approach. And then 8, of course, the last one, objective of financial reporting, general purpose financial reporting, and qualitative characteristics. Okay. Standard setting process. Is OGBA outside of GAP? Yeah, I mean, see, GAP requires, if you remember, GAP requires accrual accounting. Remember when we did the page on assumptions and principles, one of the principles was accrual accounting, right? So GAP necessarily requires you to follow accrual basis of accounting. You cannot follow any other basis of accounting, if you are following US GAAP. So therefore, OGBA allows you other basis of accounting. It allows you tax basis of accounting, contractual basis of accounting, even cash basis of accounting, right? So obviously, OGBA is not GAAP. Okay. Ipvinder, it will be difficult for me to repeat anything because time is limited. You can watch the recorded video, anytime, any number of times. So I'm sorry about that. I will not be able to repeat anything because trust me on this, my time is very limited and I have to cover a lot in this allotted time, right? So repeating anything won't be possible. Recording will be available. Is that okay, Ipvinder? Recording will be available most likely by Tuesday. Generally, it comes out by Tuesday. Tuesday, I think, end of day. So yeah, it takes about 2 days. Maybe you will get it faster. Saturday's class, you might get it on Monday, and Sunday's class, you might get it on Tuesday. But normally, it comes out on Tuesday. Okay, I'll show you Ashish, I'll show you the unlimited test option tomorrow, if that is okay. I have another class coming up in 15 minutes. Okay. Asim, if possible, can you demonstrate how to take the unlimited test? Sure, we'll talk about the unlimited test tomorrow. Okay, thank you so much, guys. Have a great day. I'll see you tomorrow morning.